How to create infinite possible returns with minimal risk. My name again is Don Kaufman, and you are watching a TheoTrade presentation. A risk disclosure. Yeah, we're not financial advisors or a broker-dealer. So for those of you that are brand new that are tuning in tonight as I throw the risk disclosure up there, how many of you, this is the very first time that you've ever come out to a TheoTrade presentation? It's, listen, we're home, we're quarantined, okay, at least for the next few days. Well, it depends on the state that you're in, but how many people here brand new, never seen a TheoTrade presentation? The reason I mention this right now is because I always throw up that we're not financial advisors or a broker-dealer, simply because I was in the brokerage business for quite some time, which I'll describe here momentarily. The next on the screen, this copyright disclaimer. It's ours, it's not yours. The real reason I throw this up is I want you guys to have our address. You can always reach us. We're right here. Again, our office is in Scottsdale. It's right here in Scottsdale, Arizona. But the most important thing that I want you to see on here, support at TheoTrade.com. Listen, if you ever need to get a hold of me after tonight, okay, why don't hide in a secret bat cave somewhere? You know what? You can't even use that phrase anymore. Nothing with bats can be talked about. Yeah, this is the first time in the world. Okay, Batman, not a cool thing. If you ever need to get a hold of me tonight, or after tonight, or anytime in the future, support at TheoTrade.com. And just put my name in the heading. We use a common inbox. Again, a common inbox. Just put my name in the heading. That will get directly to me. Next on the list, listen, this is why you're here. Every time I do one of these webcasts, okay, every single time I do a webcast like this, I want you to be able to take something away, okay? Something definitive that you can literally apply to the markets, okay, immediately. And I hope that will resonate with you, because I'm going to come in here and I am going to fire at you. By the way, I'm going to tell you guys right now, we're slated to be an hour. I'm going to run over tonight. I hope that's all right with you. I know I'm going to run over because I put a lot of time and a lot of effort into the education that we do here at TheoTrade, and I put a pretty spectacular presentation together for this evening. I think you guys are really going to enjoy it, but there's going to be some definitive takeaways. Number one, okay, and I like to just go through these because I want you to know what you're going to be here for, okay? We're actually going to talk a little bit about edge in the markets. Some people are familiar with that term, maybe some people are not. You're going to learn where edge lies in the markets specifically today, okay? And to turn that edge into potential profit. Number two, find one strategy for potential mass returns. We're actually going to look, okay, for some very large returns with minimal risk. Number three over here, discover how you can reduce risk of the portfolio, regardless if you're long or short. Some of the strategies that I'm going to use are going to help you with risk reduction. Number four over here, determine how one strategy can help you in creating a really high return, okay, to risk ratio. If you're not familiar with that, it basically means, again, is what I said up top, fairly minimal risk, okay, extreme returns, and it's the most extreme for bullish and bearish markets. And I want you to know this is a strategy tonight about extremes. And number five, what are the right steps to take, whether you're trading or investing? This is not going to really matter. Like, some of you are going to come tonight and be like, I'm kind of a stock guy. I don't do that much in terms of active trading. It's okay, because I think you can use this whether you're really active or whether, you just have a 401k and you're kind of interested in getting a little bit more active. All right. One aspect I also want to provide to you. We're going to give you a gift if you stay with me to the end of the webcast tonight. We do this simply to get you, obviously, to stay to the end of the webcast. It's auto expected move indicator. Now, time out for a second, okay? The auto expected move indicator. Maybe you've never heard of it. That's fine. What is that? Tonight's presentation, okay, is going to detail a tremendous amount about the auto expected move indicator. This indicator, I am going to just go into it right now. Hands down, it's the single most complicated code that has ever been compiled for an indicator. This one happens to be, and I'll show you in just a moment, it's the single most advanced, code. And I'm going to show it to you and why, okay, you're going to want this indicator. And again, the indicator, it's yours. Stay with us to the end of the webcast, because I'm telling you right now, I want everybody to have the indicator. We will provide you a link, okay, right at the end of the webcast. That link will take you, okay, to a site. you'll be able to download the indicator. And it's an indicator that has completely changed the way that we view the markets. It's $497, and we give it to you this evening. It's an auto expected move. Now I'm actually going to show it to you. What the auto expected move does, and you're going to see this really in a lot more detail later because we're actually going to use it. Okay, and that's why one of the reasons that we're giving you the indicator is so that it's tangible, right? What the auto expected move does, right? It's ranges. Like, see these ranges? There's 1, 2, 3 lines. There's an upper range, a middle range, a lower range. What those ranges are based on, okay? And there's range for the rest of this week. This is this week right here. All right, what this indicator happens to do, okay, is these lines aren't just lines. They're actually the options market. It's how the options market is depicting how big the risk is going to be into the future. So it is already saying like, well, this week we should stay inside of this range, and this week we should stay inside of the risk range. So what it does, though, is it works for any liquid product out there, whether it's, it could be a Tesla, it could be, an Oracle, it could be a Microsoft, any product this can be applied to. And what you're going to learn tonight, okay, is that the options marketplace is going to help us, all right, in looking for edge in the markets. And again, the highlighted candles, and then we'll get into this a little bit later, but I cannot stress to you enough, it's an indicator that you will get nowhere else. It's an indicator that will literally change the way that you view markets, and I'm going to detail that quite in depth tonight. So a little housekeeping item also before we fully get engulfed into this. Listen, tonight, I hope you guys don't mind. This is going to be a pretty detailed skill set. I strongly suggest you pay attention during the course material. Whatever you got to do, you got to shut the door, you got to turn off Skype, chat, Facebook, and phones on silent mode, and kick the kids out. You have kids? Come on, we're all quarantined. Okay, you've had kids around for umpteen weeks right now, like I do. I have a 5-year-old, 7-year-old, and a 10-year-old. I just want to drop them off. Anyway, grandkids, okay, the dog can stay. The dog can stay. Listen, you took the time to be here. It's important, okay? Focus on being here. So this is a little bit about me. And I kind of, I come to you, a lot of people read like, quick biography on themselves. I'm not into that. I mean, listen, okay? One of the primary reasons I'm here, I've got a skill set that very few people in the world probably have. I got to watch order flow for 15 years. It's a big portion of why I'm here. So my background is my background in trading. Kind of. I grew up around traders. I had an uncle that started trading in the 1970s, and he owned one seat in 1976. By 1983, his firm had actually owned over 500 seats on exchanges worldwide. His firm was, at the time, okay, the biggest Chicago trading firm. The firm was actually called O'Connor and Associates. He sold the firm in 1992 to the Swiss bank. It was a multi-billion-dollar deal. I actually, so I grew up around it, and I always knew traders and always knew, a little bit about the business, so I got into it, and I got into it in the late 90s. About a couple of years after I was actually trading in Chicago, I got invited to a startup firm. It was called Thinkorswim. So at Thinkorswim, what did I do? I built the education division. I was a fairly young guy. He said, you want to go travel around the world and educate people about options? And I said, done. Sounds like a pretty good deal. So I started working for Thinkorswim in about 2001. I was on the executive team when we took the company public in 2007. We were acquired then in 2009 for close to $700 million, of which, again, worked out fairly well. In 2010, I actually took over education for all of TD Ameritrade and their 7 million clients. And that's a big portion of why I come to you, because in that time, at TD Ameritrade, I had access to the largest retail order flow in the industry. And that means I got to see what everybody else was doing. Okay? I got to watch order flow. I had access to everything you did, and we studied all of the trades. A lot of what you are going to hear this evening comes from the fact that we studied big data. By the way, I want you guys to know something. When we say we studied trades, you're like, people get all like offended by this. We didn't go into your account and be like, what's Bob doing today? Okay. We didn't care about like one individual account. What's Mary Ann doing in her trading? It was big data. So you look at a subsection of 7 million accounts and who trades, who doesn't, are they trading options, are they trading stock? Okay. And you can start to see repeated patterns, what works and what doesn't. And what we have a lot of here at TheoTrade, first of all, we have a lot of individuals that worked specifically in my group at TD Ameritrade, and we brought them over here to TheoTrade. We have the knowledge of what works best for retail traders. And that's a little background on me. So I still do a couple of TV interviews from time to time. I just did one last Friday. This is actually TD Ameritrade TV. So this was like in studio. It's the last time I was actually in Chicago. It was all the way back in August. It was the last time I was in Chicago. I don't think I'm going anytime soon. I don't think I'm going anywhere anytime soon, like the rest of us. I also will do a couple of CNBC appearances from time to time. This is the most memorable, right? Myself against the man himself, Kevin O'Leary. By the way, the guy is a really nice guy. Don't watch the show and believe otherwise. So, by the way, I was the short seller in Apple, and he was the long in Apple. And we both agreed Apple products at the time were not doing too well. All right, let's jump deep into this. Chaos in the marketplace. All right, and chaos in general. Forget about the marketplace. Chaos in general has got a lot of people down. Okay, but it shouldn't. It really shouldn't. Okay, I cannot stress to you enough. These are the times in a market that we live for. I'm actually going to show you a huge amount about my account, my own trading tonight. This is the time, okay? This is it. Volatility is a massive opportunity. It's your opportunity. And I'm going to start tonight by showing you a couple of trades and showing you a little bit about my account in the last, few weeks, few months, to display that volatility is a massive opportunity. First, I am going to show you what is possible in the extreme. I call this the extreme, and I've been through some fairly extreme times in my trading career, but this stuff right now, it's right up there. I mean, we're beyond historic right now, and it's why I call it chaos, right? What you're looking at right here is a 5-day net liquidating value. Now, if you notice, it's kind of backwards, right? Okay, because this is the way, and by the way, this screenshot comes directly from a platform called TOS, better known as Thinkorswim. The reason I'm showing you a screenshot from Thinkorswim, that's where I come from. Like, that's the platform that I've been on, and I helped build a lot of this. So the screenshot is directly from this. The other thing you need to know, this is an IRA, okay? I started in this particular IRA, and I have several accounts, and I'm going to show you another account here in a second. This is actually February 23rd, February 24th, February 25th. This is actually the beginning of a pretty phenomenal run. Okay, so I gave you a subsection of a week inside of February. Then I went to a subsection of almost precisely 1 month later. It's the exact same account, okay, and you can actually see the run that I went on. So the account, I mean, people always ask, like, what's possible in volatility? I took about a $211,000 account, and inside of 1 month turned it to 308. I'm going to tell you right now, that's about as good as you're going to do without risking everything. Listen, that was also fairly minimal amounts of risk, and I'm actually going to discuss the strategy tonight. Now, with that, that's what's possible in the extreme. The next thing I want you to see, this is a separate account. Okay, this is a separate account, and I took this screenshot again much more recently. You can actually see the 17th, the 18th, the 19th, the 20th, okay, just over a week ago. And this is in any given week. By the way, this is part of a weekend. I think that's a Friday, a Saturday, a Sunday, okay? This is a Monday and a Tuesday. Again, we're still running right now. And this is about a $700,000 account. I trade upwards of a few $1 million, but this is, again, it's a separate account from the previous account that I just showed. But I wanted you to see what was possible in extreme volatility. More importantly, though, because people look at this and they think, that's great, you showed me P&L. That's just wonderful. What kind of trades do you have in there? Let's get down to it. Here's some of the trades that actually boosted the account. This is actually volatility. These are all live trades. If you've never seen, and I want you just to get comfortable with this because I'm going to show you later trades that I have on right now, like stuff that you can do now. I want you to get comfortable with this. This is January 17th. I initiated the trade, the exact time and date. This is the exact time and date I exited the trade. Okay, this is to open. I opened the trade. I closed the trade. This is the VIX product. Okay, the exact options that I used. By the way, timeout. These are option trades right here. You have to trade options? Absolutely not. But I am going to show you a couple option trades. This is what I paid for it. This is actually done for zero. Okay? I exited it for a $3.75 credit. Okay? That's a absolute grand slam home run in a volatility-based trade. It's a volatility-based trade. It was on for about, a period of just over a month. Next on the screen. This is an XLF. What we talk about is called a risk twist spread. Now, time out, because I'm going to show you precisely this trade tonight and why this trade is working right now. This is an XLF risk twist. I entered it on obviously December 20th, exited it in late February. I had no knowledge. Like the coronavirus obviously helped this trade, but I had no knowledge when I put the trade on. Do you think I put a trade on December 20th? Nobody was talking about any virus on December 20th. I always have these trades on. Here is for every $36 I invested, okay, I got back $135. Now, I could have invested $360 and gotten back, received back, okay, $13.50, and that's 275% return on that particular trade. Okay, again, I wanted you to see all the opening, all the closing, and I just want you to get comfortable with what that looks like right now because we're going to talk about that in more depth. Here's an XHB. If you've never heard, and I'll make this clear, a moment ago I just talked about the XLF. Come on, what's the XLF? Anybody know? What's the XLF? It's the financials. What's the XHB? It's the home builders. So here's a home builder trade. Home builder trade entered in late February, exited in late February, February 21st to February 28th. This is actually one of the biggest, shortest trades I've had on. Every $53 I invested, I got back $362. It's a 583% return inside of a one-week trade. Again, this could be $530 turned into $3,620. Again, the entire trade is there. We'll detail this one specifically more later. Okay, and there's the XLU. The XLU, this is a risk twist. And this was every $96 I invested, I got back $1,272. It's a 1,225% return. The dates of the trade, it's just over a month. So I carried this trade just over a month, and that was another one, huge. By the way, this is what our members are saying. Marshall, GDX ended up having a fantastic trend day, made 50%, but it could have actually hung on and made more. This is Trader Vic. Wow, thank you, TheoTrade. Just closed my position with a $30,000 profit. Got out of Lulu Butterfly for 137% return. Listen, we're going through an incredibly difficult time. All I wanted to show you initially, okay, is that volatility is a very good thing. And I'm also going to display one other aspect. You just gotta think through the chaos, okay? And in this chaos, you just never forget. You keep reminding yourself. Okay, you're watching the market whip around. You're like, this is just crazy. Volatility is a very good thing. Check this out. This is one that a lot of people don't look at. Okay, the number of trades are absolutely exploding right now. Why? Because volatility is a very good thing. And if you've never seen this before, this is average trades per day in thousands. Okay, and this is only at TD Ameritrade. Yeah, you'll never guess why I picked TD Ameritrade. Not because I worked at TD Ameritrade. Okay, I actually ran an education division at TD Ameritrade. Has nothing to do with it. I picked TD Ameritrade because of they have the single largest retail client order flow in the entire industry, bar none. Look, in September of 2019, they were doing 810,000 trades, and then it picked up. By the way, right here is where commissions went free. Commissions went free, and it barely picked up. Everybody thinks it's free commissions did it, man. There's free commissions here, and there's free commissions here, and there's free commissions here. And in February, the volatility started, and there's free commissions here. And guess what? They're up right now, upwards of 3 million trades a day. 3 million trades a day are going through the system. It's insane. Okay? Why? Because volatility. By the way, the April metrics, they're not out just yet. I just wanted to show this. I clipped off the full 24-month history because I wanted to show you. Not free commissions that did it. Okay? It's ultimately volatility because it's a good thing. Now let's get down to it. We're going to talk a little bit about your opportunity. Okay? This is your time to shine. With risk like this, okay, you got to turn it around. It's big. And this monkey, speaking of myself, I know volatility. This is what I was pretty much born into. Again, I started trading in the late 90s, specifically 1998, and I have always been a volatility-based trader. So as I say, this monkey knows volatility trades, and you should too. Let's actually get down to some real details. Volatility is the equivalency of risk. So we're going to talk, okay, a little bit about volatility. We're going to talk a little bit about risk, okay, and we're going to talk a bit about options markets. Now, okay, for those of you that are brand new here, you've had no experience whatsoever. How many of you have never traded an option before? And we have a lot of people on. I think there's over 500 people on tonight, but how many of you have never traded an option before? It's okay, because a lot of people, they almost get offended the first time I say options, okay? I said the O word. Huh? Okay, come on, how many people here have never traded an option before? People, okay? Admitting it is the first step. And I'm not going to stress you out on options lingo and so forth. If you're brand new and you've never traded an option, I want you to grab big, broad strokes of logic, okay? Understand the nuts and bolts behind this. Now, for those of you that have traded options, okay, you're the people probably looking at my last trade that I showed you, which was called a risk twist, and you're trying to figure it out right now. Hold on there, cowboy. Don't try to figure out the risk twist just yet, okay? Because I'm actually going to get into some details of this. So I want to go back and I want to review, okay? Not the basics of options. I want to review a little bit about volatility because it's more important right now, okay? In the end, an understanding of volatility is literally more important than people like, what does it call? What does it put? For right now, though, that's not going to give you edge. Anybody can figure that out. What you can't figure out, and what a lot of people don't figure out, is how to turn volatility into the edge. So let's get down to it. Option markets can be thought of as putting a price tag on risk. Okay? Pricing in markets is determined via market participants. Okay? Ultimately, options pricing, it's all about supply and demand. Now, lots of people have heard about options. Maybe you haven't, but for the most part, if you have an option and the option is trading, okay, $3, okay, at 305. So the market's 3 at 305. Effectively, people will go, what sets this price? Well, what sets any price? Okay? When somebody goes out there and they want to buy or sell a $35 stock, the stock is $35 at, okay, 35.01. Okay? It's the bid, it's the offer. This is a bid, this is an offer. What's the difference? What sets an options price? You go, it's time. What sets an options price? It's volatility. What sets an options price? It's supply and demand. In the end, options are about supply and demand. Never forget that. Never forget that. Supply and demand is everything. If everybody wants options, the prices go through the roof. Okay? You know what? They should do that right now with toilet paper. Okay? Everybody wants toilet paper. If you go to Costco and they just have like the toilet paper there, like, no. Toilet paper is no longer going to be $20. Now the toilet paper is $200. Me, I'll walk in there and be like, sold. I'm not going to another store. But you get what I'm saying. All of a sudden the demand drops and people go, that's ridiculous. I'm not paying $200 for toilet paper. Okay. And you know what? Okay. Then the supply is there. And then what do? They have to lower it down. The point that I'm getting at, I had to use some really disturbed example to get there. But the point that I'm getting at, in the end, option pricing, it's really about supply and demand. High risk, higher option pricing. Low risk, lower option pricing. Let me ask you a question. What's the volatility been in the markets lately? What has this market done for me lately? What's the vol been in the markets lately? Anybody? Okay. Anybody? Anybody? What's the volatility been? You guys tell me. By the way, these are not the rhetorical questions. You know, there's 500 people on. I will wait. I will wait as long as I must. Okay. The interesting thing right now is, and by the way, I will bring up live markets all day long in here. Okay, again, I don't talk about trading. Anything I talk about tonight, and I really mean this, anything I talk about, I have risk on. I will trade every strategy, and every strategy that I present to you tonight are live trades. The one interesting thing right now is the market hasn't really moved all that much. Look, the market hasn't really been moving all that much higher or lower, but the volatility is still really, it's up there, okay? I mean, you have what's called the VIX, the volatility index, still at like 33. Okay. I feel scared. Listen, that doesn't make a lot of sense to people. So let's explain what volatility is. And more specifically, what can it do for you? Like, you know, what have you done for me lately? So let's explain volatility. Now this is a slide that I literally have been using this particular slide to explain volatility for 20 years. All right. What you're looking at here is what volatility really amounts to. And that's all I want you to understand right now. What volatility amounts to, like if you say that volatility, okay, is at 20%, and you have a stock and that stock is trading right at 100. So right there, this is a $100 stock. Now, we're not talking about buying or selling the stock. We don't want to forget all that. Forget about buying or selling the stock. All I want you to understand is you have this $100 stock and it has a 20% volatility. What does that mean? It means within the next year, that stock can move up 20% or down 20%. Guess what? If 20% of 100 is? It's $20. So it means the stock can move up $20 or down $20. See, the weird thing about volatility that people miss, volatility can be extrapolated. That's the vocabulary word of the day. It can be extrapolated into stock price movement. Everybody okay with that idea? So when I say the thing can move, it can move up, it can move down. Okay, that's great. What's it going to do, Don? What's it going to do? It'll stay in that range approximately 68% of the time. Now stop right there. That's when everybody kind of panics, right? When they say, how do you know it's going to be 68% of the time? Well, we're going to get there here momentarily. When I say 68% of the time, though, that's where they panic. That's just one standard deviation, okay? In this world, okay, most stuff that happens in what we term the meat of this curve, okay? So most occurrences happen here. But what's going to happen to you out here and out here? Okay, so if I say that volatility, all right, is 20%, you should stay in this range. And you should stay in that range 68% of the time. But that doesn't mean that wild and, things can possibly happen to the outside. But what's cool about this is that volatility is giving you a feel for stock price movement. Are we okay with that? What's the only problem with this? I'm going to actually tell you what the problem is. Okay, the problem with it is it's good for one stinking year. Okay, I don't need it for 1 year. I don't want to know what's going to happen, okay, in May of 2021. I want to know what's going to happen in June. I want to know what's going to happen in July. I want to know what's going to happen in August. You know what? I want to know what's going to happen next week. Can you take that volatility? This is the most important thing, okay, because I asked the question, what can implied volatility do for you? What can it do for you? How about we take it and we can extrapolate what this stock can move within 1 week. Can it do that? Of course it can. You take the volatility, you just divide it out, yada, 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 and you got yourself a little equation. What's the equation say? The equation says expected moves. So if I know what the volatility is, I can tell you how far the stock can move within 30 days, within 60 days, within 90 days. Done. It's called expected move. Now, remember, okay, tonight, we're giving you an indicator that automatically applies expected moves to every single product for exactly 1 week. So people ask me, where is Apple going? And I go, I don't know. You whip out the MACD, you got a Fibonacci, you got yourself a Bollinger Band. You want to know where Apple's going? First, you have to assess how far it's capable of moving. How far is it capable of moving? Can Apple move up $2 or down $2 tomorrow? Can Apple move up $5 or down $5 a week from now? Think about it for a second. Can it? Because that information, I believe, would be critically important. Okay? And it'll stay in that range, again, 68% of the time. Now, time out! What's a really volatile stock? You guys tell me, a really volatile stock. So we're getting someplace now. Okay? First thing that I want you guys to understand, volatility equals risk. Remember, volatility, it's a softer, gentler word for risk. The next thing I want you to know is that volatility is really about supply and demand. If everybody in the world starts panicking, they're like, it's a coronavirus, it's the Fed, it's the this, okay? The volatility is going to go skyrocketing. So right now, we assess that volatility was kind of high. What's a really high volatility stock? You know what's awesome about this? Almost every single one of you that chatted in said Tesla. Guess what my example is? It's like I've actually known what you were going to say. I swear to you, I did. This is Tesla's screenshot today. My, what large volatility you have, Tesla. Okay. That reminds me of like Little Red Riding Hood. Uh, eh, my, what large teeth you have. I mean, Tesla pretty much does have teeth because it has an Elon Musk. If you've read his tweets lately, oh boy, lockdown is not good for Elon Musk. Get him out of there. Tesla. What I want to show you about Tesla. Okay, and I don't mind saying this. Okay, don't worry about direction of the stock right now. Direction of the stock is not going to help you tonight. I'm not joking. Direction of the stock can help you not at all tonight. You know what's going to help you tonight is understanding this. This is an option chain. There are options for 3 days. There are options for 10 days. There are options for 17 days. There's options for 24 days. There's options for 31 days. Get it? There's options that expire every single what? Week. Now, on that option chain, stop right there. On that option chain, I want you to look over, okay, here. And you know what this says? For the next 3 days, dun, 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 we're going there the long way. For the next 3 days, boom. This stock is positioned to move plus or minus $51. Did you realize what that was? Now, you may not be using the trading application that I'm using here. Doesn't matter, okay? Because I'm going to tell you something. This happens to be the Thinkorswim application. If you're on E-Trade, they have a version of this, okay? If you're on, Tastyworks, they definitely have a version of this, okay? If you're on Schwab, well, Schwab pretty much owns Thinkorswim now, so you're going to have a version of this. It doesn't matter what brokerage firm pretty much you're at, they're going to have a version of this because everybody looks at expected move, but most people don't know how to use the expected move. So if you look at this and you say to yourself, like, okay, so who cares, Don? In the next 17 days, this is what I'm going to lay this out. In the next 17 days, okay, how far, okay, can Tesla move? In the next 17 days, pretty easy answer. It's right there. $126 higher or lower. Okay. The only question is, will it really move that much? Well, I have an answer for you. Okay. Here's the answer. This is auto expected move. What we are looking at here, okay, what we're looking at here is every single week, Tesla's expected move for the week is plotted on the chart, okay, including this week. That's the week. This is meaning this is where it's supposed to stop. This is where it's supposed to stop to the top. This is where it's supposed to stop to the bottom, okay? And what you're going to see inside, like, what does the expected move indicator do for you? Like, what is this chart even really showing? It's actually displaying, okay, is Tesla adhering the way it should to the standard distribution curve? Remember what I just said a moment ago. And again, I don't want you guys to get overwhelmed. I don't want you to get confused by this, okay? But we're supposed to be inside of these little lines 68% of the time. Is Tesla adhering to that? Is Tesla adhering? Look, it's outside there. It's outside there. It's outside there. It's outside here. This one? Oh, okay, that one stayed in. Oh, this week it's outside. This week it broke to the bottom. This week, oh, it finished inside. Oh, this week it's way outside. This week it's way outside. This week it's way outside. Okay, this week inside, outside, outside. Do you understand, statistically speaking? You're supposed to be inside this range 68% of the time. Okay? This is the options market. So what's the options market doing right now? The options market is wrong. The options market is doing a terrible job of handicapping risk. Do we understand? Time out. Do we understand thus far? Because I'm going to explain this in another way. Because this is the part that a lot of people, they don't get. Okay? And I'll tell you what, this indicator immediately gives that to you by looking at it. And by the way, I can bring this indicator up. People go, I want to see what it looks like. What stock do you want to bring up now? Okay? We just brought up Tesla. What else do you want to bring up? I like this. People are trying to come up with strategies. Oh, this is a good one. Beyond Meat. Okay, Beyond Meat went beyond ridiculous. They had a little bit of earnings after hours today. Okay, but Beyond Meat. So Beyond Meat. I'll tell you what. Tonight you're thinking Beyond Meat. It closed at 100. Tonight it's only up $5. It was supposed to move another 15 the rest of this week. Is it going to move 15? No. It's not. It doesn't look like it's going to move 15 right now. Okay. So what do I do on here? I'm going to come in here and I'm actually going to click auto expected moves. I'm going to apply the auto expected moves. Now what I want you to see, because somebody said Beyond Meat, I want to see Beyond Meat. I want to see if Beyond Meat looks as crazy as Tesla. Actually, it doesn't, not even close. Okay? This one's outside, this one's outside, this one's outside, but this is inside, 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 inside. Okay? That's a mild breach. Inside. This one's outside. Okay? This one almost adheres 68% of the time. Okay? You'd be surprised. And again, the options market doesn't get that much wrong. But what this indicator does is it instantaneously, okay, can allow you to see what's right, what's correct and what's not in terms of pricing. And that's why I say, what to do with volatility? Okay? I mean, look, this stuff, it sounds like a real party. You know? You're like, okay, so it says that the product should move this far, meaning that, all right, let's just, again, draw this up on the screen so nobody panics, okay? You have this stock, and the stock is supposed to move, you know, up, for instance, $3 or down $3. And the stock, okay, decides it doesn't move $3 up or down. Instead, the stock moves up 6. So the options market priced it to move 3. It really moved 6. Sounds like a party. How do you use it? In the end, none of this crap matters unless you can actually turn it into P&L, right? Because that's what matters over here. Listen, understanding implied volatility, it's a step in the right direction. As I told you, tonight is interesting because, you know, a lot of the examples that I do, and again, I've been teaching, you know, options for quite some time, in stocks and futures. I trade everything. I'm an equal opportunity trader, and I've been teaching this stuff for a while. But I'm going to tell you, there's sometimes I get really caught up in the actual trade, and I'm talking about, you know, a call and a put, you know, and a you know, there's some crazy names for some strategies out there. You get caught up in the strategy. In this case, it doesn't matter. None of that matters. What matters is you understand, okay, that implied volatility is going to help you. But then you have to say, understanding implied volatility is a step in the right direction. But how does this stuff actually translate into profits? Because sooner or later, you have to get away. Like, people get so caught up in, like, you know, let's look at implied volatility and this and this. Okay, yeah, that's all well and good. If it ain't going to make money, who cares? Because that's what you're here for, is to learn how to translate whatever you're seeing, okay, in a marketplace into P&L. Okay, I'm going to actually bring you into a trading concept very few people know. Less than 1% of market participants. And, you know, I throw that out there, and I throw that out there like, you know, oh, like less than 1. How could you possibly know that? Okay, how could I possibly know that? Yeah, how about I worked at a firm that had 7 million brokerage accounts? I know exactly what people did and exactly what people did not do. And they always overlooked something that I always thought was obvious in terms of trading, but I also grew up around traders. I did not grow up, and I want you guys to know this, okay? I never grew up around people looking at MACDs and Fibonacci's and Bollinger Bands. If you're aware of this, I am not a chart guy, okay? I just don't buy into that stuff. Because, you know, in the end, you're like, well, what if you're wrong? Well, markets are not about direction. Because some guy on CNBC, you know, what do you think about the market? By the way, the irony of CNBC, okay, they were censored a couple times, all right, by the regulatory authority. So now they always have a bullish and bearish person on there. And when they really need a bearish person, they call me. You know, they literally, like, they have to have one bullish, one bearish. What do you think about Apple? Oh, I'm very bullish. What do you think about Apple? Oh, I'm very bearish. And they have these two monkeys argue on there. Okay. I mean, they should just, you know, all out like, let's fight. But wait, we have to fight with social distance right now. Listen, okay. The concept I'm going to bring to you, very few people understand this. And it's about volatility. It's about taking advantage of volatility. And that's exactly what we're going to do. And, you know, it's funny because 1% even are aware that this stuff exists. But the problem is even less figure out how to actually trade the concept. I mean, it's just conceptually, it's great. Now I'm going to show you the concept. Then we're going to take it to a trade. Okay. You got to have the full Monty. Know your volatility. You got to know your volatility. There are two types of volatility that you need to understand. Implied and historical. Implied and historical. Now, almost everybody that's coming tonight has heard of these terms. And again, as I said, understanding the concepts, no problem. Okay? I'm going to show you why so few people get this. Right here, implied volatility. It's the volatility that justifies an option's current market price. Implied volatility is options pricing. It's supply and demand. Okay? Then we have historical volatility. It's the standard deviation of the past stock price movement. Listen, you know what historical volatility is? It's how much is Tesla really moving? Is Tesla going up? It's going down. It's going left. It's going right. Okay? It's how much the stock is actually moving. Now, you can sit there and you can compare implied volatility and historical volatility in a chart all day long. Like this is kind of a let me show you like a goofball way to put this together. Somebody comes onto a chart and they come over here to go studies and go add study and go volatility studies and yada, 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 historical volatility. Okay. All this historical volatility does, you're like, oh, that looks like it's going down. All historical volatility is how much the stock is moving. That's it. What's implied volatility? Well, I could put implied volatility in the chart, but what is implied volatility? Implied volatility, okay, isn't how much the stock is actually moving. The implied volatility is the implication of what the stock is supposed to move. Does that make sense to everybody? So implied volatility says we should be moving at this rate. Historical volatility says, no, we're actually doing this. Yeah, okay, because we're getting someplace. Now you got to find edge. What if the market continually moved big? However, options did a poor job of pricing in those larger moves. Okay, so what I'm saying is this. The options market, and I was talking about this a moment ago, the options market says we're supposed to move up $3 or down $3, just like the example I gave you a moment ago. But instead of moving up $3 or down $3, first of all, you don't know whether the stock's going up or whether the stock's going down. Okay, is that a fair assumption? You don't know. You go, but I do know. I have Elliott wave. Elliott tells me. By the way, the Elliott wave thing actually absolutely kills me. So the reason it kills me is like, I'm in a type 4 sell. If you ask 4 different Elliott wave people about what a type 4 is, they'll come up with 4 different answers for you. So yes, I'm picking on charts a little bit for a moment. I don't care whether it goes up to $3 or down to $3. Okay. The question to me is, what happens if the market itself is moving bigger than it's implied to move? So when I say it's implied to move up or down $3 and it moves 7, there's a huge gaping hole in there. That's the edge. But how? Okay, how do we go about finding that edge? How do we go about finding stocks that are moving more? All right. How do we go about finding stocks that are moving more than the options market expected? Like, how do you do that? Well, how do you think? Why do you think I just mentioned all that stuff about expected move? Okay. Enter expected move. Enter the dragon. Auto expected moves. You can visually display a stock or ETF smashing through what the options market expected. In other words, you can actually see a stock moving beyond what the options market has priced movement to be. Now, before I go and I show you another slide, I'm actually going to take you into an option chain. I'm going to take you into what's called the IWM. All right, who knows what the IWM is? Okay. By the way, the MMM is the market maker move. This is not the MMM. Okay, that calculation is, I don't like it. Okay. Who knows what the IWM is? Because it says it right here. The Russell 2000. It's an ETF. Okay, so why did I pick the Russell? I'm going to show you why I picked the Russell. Don't look at the chart. You know why? Is this where you're going to bring up the Elliott wave? No, it's not. Okay, where's the Elliott wave? Oh, I do not have one on here. So, and I've got positions, obviously, in the IWM as well. In the IWM, I just want you to do me a favor. Look 31 days out with me. We're going to look 31 days out, and I'm doing this a little bit off the cuff because I want you guys to really understand this, okay? In the next 31 days, the IWM is supposed to move $13 higher or lower. Now, I know that $13 higher or lower seems like such an esoteric number, okay? But here's the bottom line, okay? What price is that $13? It's the options in this chain. Look, if you took this and added it to this, okay, it's pretty close. It's like $6 and change here and $6.31 here. See the price? Okay. Okay. Actually, this is closer to 127. So bear with me for a second. I'll make it even cleaner for you. Okay. You would really be adding these two together. So this is 655 plus basically $6. So what do you come to? Almost $13. So you could buy the options in here. You could buy both options, a call and a put. Now, if you bought a 27 call and you bought a 27 put, you want the market to go up or you want it to go down. But this would be crazy. You'd have $13 at risk. But what happens if you had this $13 and you paid $13 for this thing? Because the market's supposed to go up 13 or it's supposed to go down 13, right? But what happens if the market actually moved, what, 20 higher or 20 lower? But what happens if it moved $20 higher? Like gold, Jerry, gold, because you just made $7. Does that make sense to everybody? You just made $7. The only problem is there's no way that I'm buying both of those options. There's just no way. That's just too expensive. I would never do it in a million years. Okay. Why am I showing you the IWM? Because the IWM, okay, I'm going to apply now the auto expected move. Dun, 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 dun. This is a screenshot that I took today. What I wanted to show you is the IWM should stay inside the expected move 68% of the time, meaning that the IWM should stay inside of these lines. That's its expected move for the week, but swing and a miss. Then the next week came swing and a miss. Then the next week came swing and a miss. Then the next week came swing and a miss. Then the next week came, oh, it's outside. Oh, wait, finally, here's one inside. Here's one inside. Swing and a miss, but it actually did pull back in last week. And here we are today. Okay. Mr. Toad's wild ride. Swing and a miss. Okay. Look how many swings and misses there are in here. The opportunities, okay, was just like whacking it out of a park again and again and again. And so many people are like, okay, so what, man? It moves big. I get it. There was a crash. Yeah. Okay. Because I'll tell you what, we were already cracking through before the crash. Did I show you that? Because I said this will change the way that you view the entire market. The market was already cracking through expected moves before the market crash. Look at that. It's back in February. Remember, back a couple of minutes ago, I was showing you trades that were in early February. How could I possibly have known a corona crash was? I had no idea. I was just trading the expected move. That was it. Nothing more, nothing less. We were cracking through it. Markets were actually starting to, what I call, rip apart at the seams. And you get what we term outsized moves. Volatility goes into limbo. And the risk gets huge. Okay? Here's the implied volatility opportunities. First of all, shake off any losses. All right? This is the time to make money right here, right now. And I'm going to tell you, okay, I do not want to put you at heavy risk. There are very few opportunities in this business that present themselves as prevalently as what we're going to witness following the corona crash and the fallout. And if you're unaware, like I know a lot of people have seen this marketplace, okay? And what they think about this marketplace is just, it's actually quite interesting right now because I've been talking to obviously, a lot of the TheoTrade clientele, but we rally up, we fall. It's over, people. It's all over. We're ready to go back to work. I mean, do you have any idea what the fallout's going to be? You think this is going to be a nice smooth ride? Okay. Over here, we have the Fed to thank for that. Thank you, Fed. This little sell-off that we had, like yesterday, briefly. We have what? Warren Buffett to thank for that. This is dicey right now. And moving forward, I'm going to tell you right now, moving forward, you're as blind as I am. You got no idea. But the one thing that you do know moving forward, the one thing we know, okay, there's going to be chaos and there's going to be fallout. Every single day, over the last 2 weeks, we've heard about bankruptcies. Okay. What went down today? Actually, Gold's Gym filed today. We obviously just had J. Crew, who just hired the law firm, okay, to file. The list, by the way, goes on and on. J.C. Penney filed. Neiman Marcus just hired the same attorney as actually J. Crew to file, and it goes on and on and on. The volatility is going to be big. You need to get ready for this, okay? Because what you've seen, I believe, to be nothing more, okay, than smoke and mirrors thus far. Yeah, the initial crash was pretty huge, and you can compare it all the way back to the 1929, but the fallout hasn't happened just yet. Get ready because it's coming. You got to position yourself for a big move. Get down and dirty. All of the stuff that I've talked about. How do you position yourself most effectively for the possibility of extreme movements without exposing yourself, though, to drastic risks. You can't get cute either, right? You got to get fairly serious in here. And this, again, it's big, right? Well, you could trade everything in here from, the Russell to Tesla, right? To oil markets, to gold markets, you name it. You have to figure out what's applicable, okay? Because there's potentially billions up for grabs. Watch this. What's the setup for this trade? I'm going to show you an option trade right now. And for those of you, again, that are brand new here, do not get caught up. Do not get caught up in all the logistics of the trade, okay? What this trade happens to be, it's actually an IWM. It's actually what we call a volatility back spread, okay? It's a back spread. And I want to see the exact date and time that I opened it and closed it. This spread was opened for a 20-cent credit. I'm going to draw the spread out, okay, for you so you understand it. It is a bullish strategy, but it's a wildly bullish strategy. Here, I am actually turning around and selling, okay, 1. Here, I am buying, okay, 2. So I want to detail what this strategy happens to be so that everybody, again, is comfortable with it, right? So over here, okay, I am selling 1 of these and I am buying, okay, times 2 of these. This is actually a back spread. The back spread, what does it do? It's put on for a 20-cent credit. It was taken off 3 days later for a $6.48 credit. How's that possible? Okay, what's the setup for it? Okay, anybody know? What is the setup for this trade? Because everybody's looking at MACD, you got a Fibonacci, you got your Bollinger Band up there. Okay, maybe. Dead quiet when I ask what the setup is. I just showed it to you. Okay, the dramatic and continual breach of expected moves. They're just providing ample setups. It's again and again and again. Okay, this is exactly when we initiated the trade. All I had to see was fallout. Okay, did I know that the marketplace was going to bounce back up? Of course not. I didn't care. Okay, I didn't know the market was going to bounce back up. What I did is right here, right there on the 23rd. Okay, what I did is after seeing fallout after fallout after fallout, all I did is put a trade on. And I figured if the marketplace crashed, who cares? Because I'm going to tell you right now, the strategy that you just saw a second ago, let's actually detail it. We're going to go back. We're going to go back 1 slide. This strategy was put on for a 20-cent credit. Okay. Again, I want you to know something. The strategy right here is, okay, bullish. It's kind of hard to read, right? Hold on. The strategy right here is bullish. Okay. It's a bullish strategy. You hope we explode to the upside. But if the market crashes, you still get to keep a 20-cent credit. So it's just a back spread. This one's just a back spread. And I'm trying to keep it easy. Easy over here. Now people are like, what's the loss? The loss in here, okay? If you're going to have a massive loss, okay, negligible. Probably upwards of about $2. Okay, we can help mitigate all the risk in here. Almost all the risk could be mitigated of this strategy. But in this particular case, this is a bullish strategy. But if we crash and the market falls, you get to keep a 20-cent credit. But if the market rallies and rallies huge, okay, it could turn into a $6.48 credit. So on this particular strategy, we didn't just walk away with $6.48. We walked away with $6.48 plus the initial 20 cents for opening the trade. The back spreads, they are so very much in right now. Okay, that's a back spread. And again, you see the marketplace falling apart over here, and you're like, I got to jump on the bandwagon. Okay, and I want to script again exactly what happened in terms of the chart. So I enter the trade here, right there on the 23rd. Okay. I didn't know if we were bullish or bearish. And I'll get to the I don't know if we're bullish or bearish. So I put on a back spread. And again, the back spread was put on for a 20-cent, what we term credit. So what happens if the market, though, from right here, what happens if we continue to go down? If we continue to go down, I keep the 20-cent credit. If we rip to the upside, okay, I'm going to collect whatever I'm going to collect. But assuming that we're continually cracking outside these expected moves, I just can assume that we're going to continue to crack outside the expected move. I didn't care whether it was higher or lower. And we did. We cracked to the upside. And we cracked to the upside within 3 days. And within 3 days, a 20-cent credit turned into a $6.48 credit, predicated on the idea that I knew how to take advantage of the volatility. Okay? Right? By the way, I don't want to confuse you. This trade, okay, the trade that I'm showing you right here, this one was done on March 23rd. It was closed on March 26th. It was my birthday. It really is my birthday. 20-cent credit, $6.48 credit. Now, okay, that was based on cracking through expected moves. So if we're cracking through expected moves, what's to say like, hey, Don, why can't you do that trade all the time? Why not? Because here's actually the next trade. The next trade I'm showing you is also a volatility back spread done in IWM. Now I'm going to show you a bunch of trades, but I wanted to show you IWM because it was visually appealing. It was so easy to find this one. I didn't have to spend time like, I need to find the perfect setup and the MACD is not working. Okay, this one, I mean, the IWM has just been the golden child. And if you look very carefully, well, what was the setup for this trade? Okay, what do you think the setup for this trade was? Well, if you look, this trade was done last week. I don't show anything that's old garbage. I don't want to show you some old garbage trade. I want to show you right here, right now. Okay, here's the trade that was done actually on what? The 23rd to the 26th. Okay, based on what? We were cracking through the expected move, crack it, crack. Okay, because we actually stayed inside. This one is kind of ironic. We stayed inside the expected move this week. I went for it again this week, knowing that we would probably break through. And guess what? We did. I put this trade on April 24th, took it off on the 29th. Now again, when's April 24th? And I just cannot deliver to this enough. You think I know anything right here? All I know, okay, is that we had all these weeks in a row that were just Mr. Toad's wild ride. Okay, here's a week that we stayed inside the expected move. Here's a week that looked like really, really mellow. I'm like, it's not going to stay mellow. Okay, the whole world is falling apart. It's not staying mellow. Sure enough, we actually cracked back to the upside. And in cracking to the upside, once again, it produced a $4.97 credit. This is a huge home run because I put the trade on for a 43-cent credit and pulled it off for an additional $4.97 credit. And again, it's back ratio. It's back ratio. By the way, these are trades that, and I want to clarify this, every single trade I'm showing you right now was done, okay, live. What does live mean? I mean in front of thousands and thousands of TheoTrade clientele. Here is this is April 30th. Okay, GMM. By the way, we were closing out of the strategies. I whacked one on the 29th, whacked one on the 30th, a couple of days after that. So I closed these things incrementally, but I wanted you to see this. Out of IWM at 202, okay? And somebody said, I closed it yesterday with me at 438. Then Judd turned around and said, I had another IWM back ratio, okay? 43-cent credit, sold it at 213. Corky did one, okay? Was out at $1.93. Len Yu sold IWM on the 28th at 228 credit. Okay, people got out at different prices, but that's trading. This is trading. And by the way, each one of these comments was taken obviously April 30th. It's, just a few days ago on this particular strategy. Now, I love the questions that are actually coming in right now because I'm going to hit exactly that. Listen, the future, it's bright. You might not think so right now, but the future is bright. You know why it's bright to me? Because it's full of risk. Okay, I am not here to suggest we can time the wild moves. There's just no way. You're not going to be able to time. You think there's a crystal ball out there? There isn't. You're like, I'm going to find me the perfect indicator. You know what? Okay. I spent 15 years of my life working on this trading application, Thinkorswim. This is the most robust trading application in the entire industry, pretty much bar none. I don't care whether you use Thinkorswim or E-Trade or Tastyworks, but the trading and the charting software in here, it's bar none the best thing pretty much in the entire industry. And not one of these indicators is going to tell you what's about to happen. Because you know what? Not even the Fed knows what's about to happen. No one can see the future. Okay. We are, however, suggesting you place the right trades. Okay. It's going to make all the difference. All right. You can be about 2 trades away from something like this. This is what we call the infinity spread. Now, the infinity spread is actually taking both sides of the marketplace. Okay. Now, I've showed you thus far, I've showed you a couple of bullish trades. Here is both bullish and bearish. The infinity spread is a series. It's actually 2 separate trades, okay? One to the upside, which is your bullish trade, one to the downside, which is your bearish position, okay? And that's why we call it an infinity spread because, well, infinity is no limitations to it. I mean, technically speaking, they continue to go. That's what these back spreads actually do. Now, they're not standardized back spreads. Okay, this is also, I mean, this trade, like, oh, it's so complex. It's not complex. Okay, the trade is rather soft, rather mild. It's the setup for it. It's how to actually structure the trade. Okay, now before I go, and I'm going to show you this trade again because this is what the infinity spread is. You know, so don't panic to try to, like, people like, I'm going to copy down that exact trade. This is a trade I built literally today. Okay, before you copy it down, I'm going to show you my trades. My trades. Proof is in the pudding. Okay, what I just showed you there, okay, and what I just showed you in the aforementioned backspread examples, this is not something that I pulled together because of the Corona crash, okay? This is something that I've been working on my entire career. I am a volatility-based trader. Always have been and always will be. And some of you have probably known, I mean, I've been around in the education side of this industry since 2001 was the first time I ever spoke in front of a group, okay? And I've always been a volatility guy, and I've based my entire career on it. So I'm going to show you a little bit about what that career kind of looks like. First, allow me to display a number of key events surrounding the last few years. I'm just going to show you trades around the last few years whereby the markets and volatility, okay, did not effectively price risk. So the way that I've actually made a career of trading, right? To me, I'm a crisis-seeking kind of guy, and I'm going to show you where volatility didn't effectively price risk. Now, markets don't have to be volatile, okay? Do some of these strategies, but I'll tell you what, sure does help, okay? And I believe it helps absolutely huge in this particular case. But after I show you, okay, I'm going to show you a couple of years of volatility. Thereafter, I'm going to display current trades, okay, and the primary strategy I use to create some of the opportunities. All right, so the first thing I actually want to show you here, we're actually going to drop and we're going to start a little quick history tour. The yuan devaluation of 2015. Anybody remember it? Okay, I'm only going back, what, 5 years here. Okay, this is not it's the end of the world. Okay, it's not. The yuan devaluation of 2015. Volatility tripled in 3 days. So there's volatility spiking. Okay, here's actually my account from August of 2015. Now, the reason I'm bringing this one up, this is the first, okay, couple of months after I left TD Ameritrade. So it's like one of the first times I can actually display my account. Okay, if you look very carefully, and I know that this is small print. It's not meant to be small. I had a lot of crap on. I show people everything, the P&L from the open, the profit and loss percentages, the P&L in the day, everything I will show you in here. This is actually, okay, August 24th to August 25th. This is a 24-hour window of my account. Right there, I'm up $17,399. Okay, that one was all right. I mean, it was all right. It was, it was a flash in the pan, though. There's no question. The marketplace tanked and it recovered. And, in a 24-hour period, I was up some $17,400. The next, the taper tantrum of 2016. All I'm showing you, okay, is just events that happened. Volatility actually doubled. Now, the taper tantrum, though, of 2016, okay, this one, it lasted a really long time. Let me show you down below. This one actually lasted. It kicked off in basically the beginning of 2016, right? And it persisted until like almost till March before all the volatility was gone. And in that particular time frame, when volatility doubled, okay, this is the exact P&L, everything in here. This is a little easier to see. This is subsection from January 1st, 2016 to the end of February. And there's the P&L, the year to date. It was $100,000 of P&L. The reason I bring this up because that was almost the precise P&L that you just saw that we had during this most recent bout of volatility, obviously in the onset of the coronavirus. So my P&L was almost identical in that particular time frame. By the way, this one was actually on approximately a $250,000 account. I had about $100,000 of profitability inside of and this is a full 2-month window, almost to March. Okay, so that's the taper tantrum of 2016. Next in the docket, Brexit. Brexit, flash in a pan. Nobody saw this one coming. Nobody saw that coming. And I'll tell you what, it was actually a really good window of opportunity because the volatility, it was really low. I mean, volatility, and I'm showing you here, Okay, this is what we term implied volatility. That volatility was like 14%. All you had to do was buy volatility here. Okay, you didn't know it was going to go up. You didn't know it was going to go up. Nobody knew it was going to go up, and it just went to all the way to like 24%. So, okay, if you had those positions on, okay, it's a good couple of days. This was actually a 24-hour window once again. 24-hour window. It's $25,000. $25,201.13 was the P&L from that particular window. 2016 is an interesting year because we had the taper tantrum. Nobody saw that one coming. We had the Brexit vote. Nobody saw that one coming. Then they had the, obviously this is the Brexit vote P&L. This is the presidential election. Presidential election, all right, volatility here lasted. Now, this is the first time I actually started using the terminology, okay? The terminology became known as the infinity spread, and it was based around the presidential elections of 2016. So this is the exact execution. And again, you're seeing back ratio, back ratio. These back ratios were actually done in futures contracts. I put them on for like $2.65 credit, exited for a $19.25 credit. Okay, here's another one that I actually did in a similar time frame. I entered for a 70-cent credit, exit for $30.75. You have to realize, like, even one contract of this is futures. Futures are big. Even one contract, okay, at the time, we're talking about, you know, $10, $15, $20,000 of profit and loss, okay, on one little contract on here. These were the infinity spreads based around the presidential election. Did I know anything here? Absolutely not, okay? I was told that the marketplace was going to crash. It did, right up until the point it rallied huge. These are bullish strategies. Why did I put on bullish strategy? Because I put it on for a 265 credit. What do I care if we crash? Still received a credit. Now, this is a volatility event. January to February of 2018. This is volatility. Was at 12%. This was volatility. This was actually, at the time, the single largest volatility percentage moves ever recorded in history. The speed of the volatility move, okay, was phenomenal. Okay, this is the infinity spread. Okay, again, here's the infinity spread. Named the infinity spread in 2016. I used the exact same trade. What I started doing is I started placing these trades. Okay, every quarter I started placing the trades. I don't care whether we move big or not. I always have one on. Why? Because I can turn a $1.37 debit into a $10.58 credit. You realize you could do this trade. Watch. Okay, let's say that I go out there and I pay $1. Nothing happens, and I close the trade and I lose my $1. Then I pay $1. Nothing happens, I close the trade, I lose my $1. I pay $1. Okay, nothing happens, I close the trade. On the fourth time I do it, I pay $1. Okay, all of a sudden, boom, it's worth $10. Let me ask you something. Is it worth doing the prior 3 trades? These trades, strike out, miss, strike out, miss, strike out, miss. On the 4th trade, I made $10. You tell me if that's worthwhile. Because I just showed you, okay, I just showed you in the last couple of years, all right, there were 2 volatility events in just 2018. I know. Okay, you think, that's all that happened though in 2018. You didn't do anything after that. Yeah, except until the Fed fueled selling in late 2018. Volatility was at 11%. 11%. Okay, back in this, September timeframe. Look at that. Look at the moves in here. They're huge. You think anybody saw that coming? This is Fed fueled selling. So I hit one of these spreads, a risk twist spread, early on in the year. Then I hit another one. Okay, all of these live trades done in front of clientele. This is the infinity spread. Opened it on September 20th, closed it on October 11th. Okay, those are grand slam home runs. And when we're talking 5, 6, 700% returns on there. Now, okay, those are all trades that were done that I'm displaying you. Here's a trade. I cannot show you the actual trade because I was working at a brokerage firm at the time. The biggest trade I had ever done was actually during the financial crisis. And the proceeds actually went to buy this. My financial crisis trade. And I'm going to tell you right now, I worked in the brokerage business for 15 years. This is not a popular topic to discuss. A lot of people, okay, lost a lot of money during the financial crisis. Some people are offended by it. To be very frank with you, okay, you're offended by the financial crisis. I was working at the brokerage trying to help retail traders, but I also had huge positions on. I bought my home for $1.3 million during the financial crisis, and I bought it in July of 2010. So I'm in this house exactly okay, 10 years. It's now worth approximately, and this is pretty accurate here because the house right here, that house right there is actually owned by a professional ball player. It's for sale for $4 million right now. This is in Scottsdale, Arizona, by the way. It's a $4 million home that's literally across the street. I'm at $2.8 million. And that is directly from the proceeds, though, of a volatility-based trade. It's before I called it the infinity spread. I didn't know what to call it. I started calling it an infinity spread in 2016. Okay, so that's one of the bigger trades. By the way, this is the inside. If you're kind of curious, I just put this there because people are. Let's see what it looks like. What does a $3 million house look like? Okay, it has a pool. It has mountains. I don't know. It's got stuff. Okay, I am right here, right there, up those stairs. My kids live everywhere over there, far away. It does, by the way, it doesn't matter if it's almost 9,000 square feet. It ain't big enough during this coronavirus thing, except you can lock your children down here, which we have been doing extensively. It does have an indoor basketball court. The kids are actually in the theater, though, right now. There's a movie, okay? And if I had to pay $20 for the movie, I paid $20 for the movie. It is worth it, okay? All right, to continue on with that one, all right, infinity spreads. The opportunities are now. So I just showed you past trades. It's all well and good, but the opportunity is right now. As I said a moment ago, I was going to show you much more recent trades. Well, here's your recent trade. First of all, this is a trade, okay? This is a trade. I mean, it's viable. I put this one together literally today. But these are all recent examples. So I wanted to take you, again, much more into recent times because the infinity spreads, it's the place to be. So here we actually are in September of 2019. This one's in the TLT, which is the bonds. It's actually the bond market. I put it on for a 12-cent debit, closed it for a 3.50 credit. Nobody ever dreamed of making that kind of money in the bond market. And I'm serious. Like, nobody ever dreamed that this crap would work in the bond market. Now we're in present year. Okay. By the way, what our clientele are saying, this is the second time I've been down service. It took a while to sink in, but in-out spreads are saving my beep now. Okay. And doing them everywhere they fit. Also using the risk twist trade. By the way, the risk twist, okay, the risk twist, what I'm showing you here is a portion of the risk twist. The put side of this is called the risk twist. Okay, it's embarrassing to think of the tens of thousands I spent on option info and classes. Don's class is the greatest. Okay, this one is from Vicky W. Don, I closed the TLT risk twist spread for 127% gain. Price was moving around so much I had to use a market order. Pretty excited to see the whole risk twist trade cycle and know how well it worked. Okay, now again, we're getting more and more recent. I'm just going to show you some more recent trades over here. This is in SPY. This is part of an infinity spread. This is opened. All right, basically late last year and closed early this year. This is a back ratio, all right, which is part of the infinity spread. I opened it for a 3-cent credit, closed it for a $3.04 credit, okay? This one, this is a Tesla, okay? Everybody familiar with Tesla? Is this one recent enough for you? So in Tesla, I opened this one on November 26, 2019, and I closed it, okay, just about 3 weeks later, December. Okay, this is actually December 16th of 2019. This is also part of an infinity spread. I opened it for a 20-cent debit, closed it for an $11 credit. This trade, it's an absolute grand slam home run inside of Tesla. Again, the setups are similar. Next one, okay, we go from Tesla, we're going back to the spiders. Back to the spiders. Why? Because now, as I said, I want to get more recent. Forget about even 2019. This is a risk twist. The risk twist is exactly what those clients were talking about a moment ago. January 14th closed on February 27th. Did I know anything was going to go on January 14th? Absolutely not. But I always have one on. I paid, in this particular case, all right, I paid $1.80 for the trade. I closed it for a $10.53 credit. Every $180 I invested, I got back $1,053. It's a 485% return. What's important to know, though, you don't have to do $180. You could do $1,800 to return $10,000, okay, $530. That's fair game. All right, that's, again, it's another one. And I'm just showing you a sequence. Every single trade that I'm showing you right now is put on. And I know people are like, what happens if you lose? I'll lose $1.80. I know you're thinking, oh, this thing's got a lot of risk in it. We can teach you how to actually mitigate the risk in it. This was an April trade. I wish I had actually held it closer to April expiration. This thing could have been worth like 50 bucks. But I'll tell you what, I don't hold it for that long. 485% return. You're out. You're out of the contest. The next one, the XLF risk twist. What's the XLF? I showed you this exact trade to begin with today. What's the XLF? It's the financial sector. In the financial sector, again, I had no idea anything was going on what? December 20th? All I know is, come February 27th, that 36-cent debit was worth $1.35 credit. Every $36 invested. I don't care. People are like, I have a $2,000 account. I can't do anything with $2,000. Yeah, can you invest 36 bucks to get back 135? It's a 275% return. But for those of you, if you want to put some real capital to risk, you could put 3,600 in here to return 13,000, okay, 500. Again, it's all fair game with the risk twist. Next one on the docket, I'm going to get even more recent on you. Okay, here's one that I actually opened. This is the XHB risk twist. I opened it on February 21st, closed it February 28th. Every $53 I invested, I got back 362. It's 583% return. Okay, all of the strikes are there. Everything is there. The ratios are there. Okay, it's huge credits. The next one, the XLU. The XLU, I don't mind saying this. The XLU got so out of hand, okay, that I actually sat back and was in awe of this one. These trades shouldn't even go this far. It's that big. This is one where I actually paid just about $1. I paid $96, okay, $96, and got back literally for every $96 I put into this, I got back a $12.72 credit. It's $1,272 off a $96 invested. It's a 1,225% return on the XLU. And I say that the XLU got a little out of control. If you guys don't recall, pull it up, okay? Because I know people like, listen, the proof's in the pudding. The XLU fully crashed, just outright tanked, okay? And we were right in the middle of it. I closed the thing on March 12th, and I want to make something clear. I closed it on March 12th. I closed this thing in the middle of a crash here. It went all the way down to 43. The strategy, you're like, could have made so much more. Oh, I'm sorry. Was 1,225% not enough? Okay. And this, I took a lot of people in this trade with us. Okay. Here, Marshall Gross, GDX up and having a fantastic trend day, made 50%, but if I hung on, could have tripled or quadrupled. Trader Vic was actually in that one. This is where the $30,000 profit came. And Greg also did a Lululemon butterfly for 137% return. Listen, all the strategies that I'm showing you right now, okay, these are hands off. This is not high intensity trading, okay? This is not high intensity trading. Each and every trade that I showed today was displayed live at TheoTrade. All the trade results, it's perfect for just a part-timer. But right now, you actually have the time probably to sit in front of your screen. Some of you are probably starting to return to work, and that's fine. But the infinity spread, it's hands off. You can even use set it and forget it order types. I was talking about a moment ago, and I'll just kind of detail this. I said, somewhere in that neighborhood of that 275% return, you can actually set the trades up to auto execute to get out what we call GTC. That's good till canceled for returns. A fraction of your time is going to be enough. Okay, a fraction of time. I just don't want people to come here and to assume that you have to be glued to the computer with the face in the monitors. All right. I sit in front of my screen for the last 22 years for 6-7 hours a day. Okay. But this is what I do. And I do teach at the same time, but I trade. I mean, that's what I do is I trade. Okay. Now, there's a couple of characteristics of infinity spreads. And you should know these characteristics of the infinity spread in the trade. You should also know, here's all the ratios, everything. Trade, it ain't that bad. Okay. It ain't that bad. Now, I know some of you guys are brand new to options, but please do not let the options portion of this intimidate you. Okay. Let me give you some of the characteristics of this particular trade, because the reason I want to discuss some of the characteristics, you can look at this trade. Okay. You can look at this trade and think, I can make huge money off of it. But people look at this all wrong. Okay. How many people here right now have a 401k, or you have an IRA, or you just outright, you own stock? Okay. If you have any of those things, do you realize that this trade can be used as a hedge? You can use it as a hedge, because if the market is going to crash again, this trade can actually swing the P&L back up of your account. Now think about this, because the trade itself, it increases in value when exposed to heavy volatility. It increases in value when markets sell off or rally huge. There's significant profit potential in downside market move. There could be a significant profit potential in upside market move, but loses minimal capital. Minimal capital will be lost though if we drift or remain flat. They only be placed a couple of times a year. It's a perfect spread to reduce risk of a stock portfolio, long or short, because the P&L graph can look like this, right? And there is a very minimal amount of risk in here. If you're going to be in this business, there's going to be risk, but it's about mitigating that risk. It's about controlling that risk. It's about knowing if the market's going to explode higher or lower, okay? But this is an excellent tool. If you're seeking large returns from big market events, this is a great, if you will, crisis-seeking trade. And right now, we think that the crisis is actually unfolded. You ain't seen nothing yet, okay? The crisis is not the coronavirus. The crisis is the Fed. It's the central bankers. Do not ever forget, because you know what? 2 years from now, when they start writing books about this stuff, you go, oh yeah, when the Fed increased the balance sheet by $2.7 trillion in 6 weeks, there's your crisis. Okay? You got to learn though to build the infinity spread. You got to learn a little bit about this. And I'm going to tell you again, do not let the options intimidate you. Okay? Because that's just, not even up for debate. Everybody can learn this. Listen, the spread below is done for $1.76 debit. But a spread like this, it's akin to a massive chainsaw. And I've used that exact same analogy of a chainsaw for 20 years. I just say this, like options, okay? You got to learn them. Sooner or later, you got to learn options if you want to be involved in this business, because options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. And I'm not here to push options down your throat for any other reason, okay? Then options, people, there's so much less risk than stock. Okay, you look at a stock even like tonight, Beyond Meat moving around like crazy. Disney, everybody's like Disney. If you asked me about Disney 5 years ago, Disney with a stock with a nail in its foot. Disney went, for years, by the way, 10 years ago, Disney was like 30, 31, 30, 31, 32, 30, 31. Never did anything. Okay, now Disney's trading like the latest, greatest tech stock. It's getting ridiculous out there. The stock has risk. Options are a way to mitigate that risk. And the analogy I always give people, if you're going to build a house, you're going to use a power saw. If you don't know how to use a power saw, you're going to actually lop off a couple of fingers. Options are a power saw. If you use them correctly, they're going to be quick, they're going to be fast, they're going to be safe, they're going to be easy. If you don't know how to use them, you're going to lop off a couple of fingers. You have to know how to use this strategy effectively. Okay? But this is what you need to know to successfully create infinite possible returns with minimal risk. To create the infinity spreads, okay, you got to go through step-by-step criteria. When and where do I place these infinity spread trades? Okay, where do I place these infinity spread trades? Like, how do you know? When do you get into them? How often should I place these infinity positions? Okay, and do they need to be continually monitored? Well, I'm going to tell you right now, no, they don't need to be continually monitored. We could actually use a good till canceled order. I already said that earlier. Okay, how do I set up the trades? Okay, and what's the correct market volatility to place the trades within? This is what I was getting back to. You actually have to understand a little bit about volatility, because right there, that's the edge in the trade. It's not about the trade. Okay, the trade, I can teach you how to place it. But you have to actually know the volatility setup. That's a portion of it. Do I need a large amount of capital in my account to do this? No. Okay. $2,000 minimum. All right. So I am going to say this. You do have to have $2,000 in the account to be able to do this. That's not my rule. That's not Charles Schwab's rule. That's actually an SEC rule. $2,000 in the account to be able to trade something like the infinity spread. And every single one of you needs to know that you could do this trade inside of an IRA. By the way, every trade I showed you a little while ago was done in an IRA. All the trades I showed you today were done in an IRA. Okay? What underlyings, stocks, or indices, ETFs, what makes the best candidate? Like a moment ago, I talked a little bit about IWM. Okay? IWM, you saw one on the SPY, you saw one on Tesla. Okay? Where do you go from here? You got to be able to find candidates. Without candidates, you absolutely got nothing. So you have to know what stock to do. You have to know what volatility. You have to know how much capital to allocate. You have to know when do I get in, when do I get out, and what percentage do I get out. In fact, what are the percentage returns supposed to be? Can I do this in an IRA or retirement account? Of course you can. We just discussed this. What do I size my trades from my account? You realize that you have to think about this because, some of you guys are going to come in here with a $5,000 account. Others of you are going to have a $500,000 account. There's a pretty vast margin of differential between those two. Okay, how do you actually size it? If you're trying to use this, okay, if you're trying to use this strategy, I don't know, what's the right amount of risk for you? Are you willing to lose $1? Okay, if you lose $1, you can lose $100 here, $100 there. Okay, and then how do you actually go about building the infinity spread? Let me show you what we do here at TheoTrade. We build recipes in trading. We actually create a recipe specifically, okay, for trades. Trades like the infinity spread. When I say like a recipe for trading, I'm literally saying, okay, it's a checklist. We go through and we say there's criteria. Step 1, okay? Step 2, step 1, step 2, step 3, step 4. We actually build a pre-flight checklist. And then once you're in the trade, and you have to actually answer more questions. What if the stock goes up? What if the stock goes down? Look, trading, it's always about answering the what ifs. What might be a good infinity spread candidate? What's the correct options expiration cycle to do the trade? Oh yeah, by the way, you have to know the options expiration cycle. How much capital do I commit? When should I execute the trade? Execute means send, okay? What strikes? There's a lot of options. Have you guys looked at an option chain lately? Okay, let me actually take you over to a product. Watch this. Look at the spiders. I want you to look at the spiders with me for a second. Look how many options there are in spiders. Okay, see all these options? What if we had criteria, a checklist that just narrowed it down to exactly the right expiration cycle? Okay, it'll literally tell you, open up this option chain. Okay, then go over here to delta, use this delta, this delta, this delta. Then make it a little bit easier. That's what criteria does. That's what we actually build here. We build answers. We build recipes with definitive criteria. It's a checklist for each strategy in each unique variable. What's a variable? What if the stock goes up? Again, what if the stock goes down? What a checklist is, okay? And every time I think about this, I worked for a pretty successful trading firm in the late 90s, really successful individual trader. And the first thing that they did, okay, is stepped us into step-by-step criteria. Okay, and they called it criteria. They didn't call it a checklist. They called it criteria. But the way that it was always explained to me, they go, kid, you get behind the cockpit of a 747. You don't hop in the cockpit, turn the key, and take off. Okay, and they're like, these pilots, sometimes they spend up to, a half an hour. They're going through the checklist and they're walking around the aircraft. They're checking everything. That's what this is. It's a pre-flight checklist. But then you have to actually get into the strategy. You have to execute the strategy, okay? And then it's actually going to take you through unique variables that you're going to encounter in the strategy. We're actually going to answer all the questions. We're going to give you the right probability for the trade. We're going to give you how many option contracts do I buy or do I sell? When do I close the infinity spread? What if the stock sells off big? We're going to give you the correct return for the strategy. What if we rally massively? Can I fix a losing trade? We're going to give you the how, the when, the why. We're going to give you exactly what price. It's just the beginning, though, of the variables that you're going to face while trading infinity spreads. Okay, listen, you can read what a spread is. I'll tell you right now, some of you are probably thinking, oh, I'm going to put this together right now. Maybe even know how to build a ratio spread. A ratio spread, an infinity spread is a type of a ratio spread. Great. Everybody here should know this. You can Google right now. Okay, 10,000 different pages are going to come up of what a ratio spread is. Literally 10,000 pages. Hey, you're like, oh yeah, I'm going to do this. Not one of those is going to give you a recipe, okay, or a checklist for success for infinity spreads. Okay, what we actually do here, we have 20 years of plus experience. That's just me. I had access to client order flow for 15 years. I viewed and studied literally millions of trading accounts. 7 million trading accounts. I ran education for 15 years at a firm with the single largest options order flow in the entire industry, bar none. Okay, you want to know where criteria comes from? Criteria comes from a lot of tiers, some losses, but having viewed and studied millions of trading accounts and big data. Listen, criteria is the recipe for success. That's what this infinity spread is built on. The following strategy and corresponding criteria, it requires the utmost attention to detail, and we spent years, the infinity spread spent years fine-tuning that particular trade setup and the criteria. And when we approach the section on criteria, you follow the steps to build the trade. Maximum returns with infinity spreads is a class. It is ready to go. We are in a volatile market right now, okay, and the class is ready to go. The class is $497. It's a 3-hour course. It is available immediately. Literally, you can start watching it tonight, and you can download it. Now, the class slide deck that includes the entry and exit criteria and the checklist is available immediately for download. Additionally, here at TheoTrade, we don't just have web access, okay, through like Chrome or through Firefox. We also have, okay, mobile access. We have 2 different mobile applications, one for iOS, which is of course Apple, the other one for Android. The course can actually be downloaded onto those devices and watched anytime, okay, anytime you want. And I'm actually going to take you through what is the curriculum for the course. Before I do so, when I say curriculum for the course, I'm actually going to walk you through what do you actually learn in this course? You know, what am I going to learn in this course? Before I do that, I want you to know, okay, we have a number of bonuses available tonight. And I'm going to show you something again. We are going to give you the auto expected move indicator in just the next couple of minutes. I know that I'm running a few minutes late tonight. Okay, as I said, I started off with that because we have a huge number of trades to go through. We have some bonuses tonight. We have never offered some of the bonuses that we're going to offer this evening. Okay, there is one very special bonus this evening. You will want to, sit back, relax for a moment. I want to take you through the curriculum. Then I'm going to walk you through some of the bonuses that we have, okay, for this evening. This is the Infinity Spread Workshop curriculum. So when you're going through and you're actually watching the course on infinity spreads, you're going to learn how to construct an infinity spread for maximum returns, minimal risk, okay? How to build your own infinity spreads. So that's the most important thing is going through the criteria. We're actually going to take you the entry criteria and exit criteria. How to build infinity spreads, whether you're bullish, bearish, or neutral, okay? How to hedge your portfolio. For those of you looking for risk reduction, I'm going to tell you right now, that, okay, is the #1 email that I got were thank yous in the last couple of weeks because people reduced the risk of their portfolio using the infinity spread. We're going to show you when to open and when's the best time to close your infinity spreads, the tools and strategies for analyzing market conditions. You're actually going to learn a lot more about volatility, how to create trades based on movement, okay, in market volatility, okay, and not direction of the market, how you can generate some massive returns in a retirement account with minimal risk and minimal options experience. We're actually going to give you detailed what strikes, what expiration period, every detail to give you the highest probability of success in the trades. We're also going to give you why infinity spreads, they're perfect for part-time traders. Listen, I didn't know any of these crashes are going to come or any of these big volatility events, but I've been there every single major event I had trades on for because we started using volatility-based trades. Okay. In addition to all of this, in addition to what I just showed you, the curriculum, we're also going to give you access to a weekly infinity spread video. This video, okay, is when I say it's weekly, all right, there we go. May 1st, April 24th, April 17th, April 9th. Okay, every single week we update you on specifics. What specifics? Let me just give you the trades. We're actually telling you exactly what trade we're in. Before I even go any on, we text out these trades too. We text them, we use push notification, but maybe you missed the text, maybe you missed the push notification. So what do? We update you once a week. And those are like 7 to 10 minute videos that say, this is the trade we're in. If you missed it, that's okay because you could still put it on now. And we take you through in detail why we did the trade, how we did the trade. This is an infinity spread though. It's a portfolio of just the infinity spread. Because I don't want you guys to think you're like, I'm going to take me a class. Okay? Because I know that everybody's done this, right? You go out, you take a 3-hour class, you pay $497 for it, and then they just go, bye, have a nice day. We don't do that. Okay? We'll actually give you updates, continual updates on a week-to-week basis. But we get this business, okay? You want a bonus? One thing I want to tell you about TheoTrade. Listen, I started, okay, this is before TheoTrade. I started in 2001 working for Thinkorswim. And I've seen everything that this business has to offer. You know how many education firms have come and gone in the last like 20, 22 years? Okay, just out of curiosity, how many of you have ever taken a class elsewhere? It's okay. Admitting is the first step, right? So you've taken classes elsewhere. And the thing you have to understand because I've seen everything over the years, okay, we built TheoTrade to differentiate ourselves from anything and everything that's out there. At TheoTrade, we're going to go beyond one class or one indicator because what happens to a lot of people, well, it's simply this, okay? You go and you take a class and you pay $497, and then that educator says you have to buy the indicator. And then after you buy the indicator, you're like, okay, so I paid $497 for the indicator, and then I got to pay $497, okay, for the class that teaches you the indicator, but I already paid $497. Before you know it, you're a couple $1,000s deep. It's getting absolutely ridiculous, okay? It's ridiculous. We understand this business. You want everything to trade and invest at one place, and you want it at one price. So here's the first bonus. We're going to give you access to the entire library of classes that we've ever done here, okay? And I'm going to throw this out right now. It's 90 classes. I did not do all 90 classes, okay? We have 7 full-time instructors. There's 90 classes, though, now here, including maximum returns with infinity spreads. So instead of giving you one class, okay, we're going to give you 90 classes. All of those 90 classes are available immediately. They're on demand, TheoTrade mobile application, wherever you want to get them. Here are some of the classes. Obviously, we're going to give you access to the infinity spread class. Then we're going to give you Guide to Surviving and Thriving in Extreme Volatility. That class was hosted 3 weeks ago. This is the Guide to Small Accounts with In-Out Spreads. Okay. Also, okay, a couple of months ago, Growth Small Account with Black Book Spreads, How to Collect Income Being Short, The Next Risk Twist. Time out for a second. This is just a smattering of some of the courses. Guide to Selling High Probability, Iron Condors, okay? Selling Premium, Minimizing Risk. This is actually a day trading class, covered calls, okay? Essential Skills for Consistency in Trading, the top 10 skills for growing a small account, pairs trading. Again, this is a smattering of the 90 classes. People, we have built the full-blown Netflix for trading. You name a genre of trade, we have it. Anything. We have 7 full-time instructors. We actually give you day one access to over $9,000 in classes alone. Okay. And we don't stop there. I just wanted to show you again why TheoTrade, okay, differentiates themselves. So we kind of give you the full Monty from day one. 90 trading classes, right? Are you overwhelmed? Okay. Anybody? I hope you realize that these courses, okay, bar none, there's nothing in this industry that comes close. How do I know that? Here are the instructors. So first up to bat, okay, this is not in order of preferential treatment. Jeff Bierman. Jeff actually worked with me at TD Ameritrade. If you've ever been on the Thinkorswim platform, this is the platform that we're showing you tonight. Okay, have you ever been on this platform? Okay, and you've actually looked under studies here. You add a study. Okay, there's over 480 studies in this platform right now. Jeff Bierman is responsible directly for over half of them. Jeff and I actually worked in the exact same group. Jeff worked in my group. Okay, it's called the Trader Group, and we had hundreds of people that actually reported up to me in that particular group. He was the chief market technician, a pretty highly coveted position at TD Ameritrade. Jeff, what does he do now? Not only does he work here at TheoTrade, but he actually moonlights. He's an adjunct professor for Loyola in Chicago. So he's a professor of finance and works at TheoTrade. Next on the list, Matt Williamson's a market neutral. He's our premium selling geek over here. I use geek as it's an endearing term. He's a premium option selling strategist. Next on the list, Corey Rosenblum. He's our senior strategist and resident swing trader. Okay, as I said, there are different types of traders, different genres of trade. Okay, you like swing trading, okay, which is a little short-term, bullish and bearish. I'm not into charts. Okay, Corey is actually much more akin, though, to directional bias. Next, Brandon Chapman. Okay, resident CMT. By the way, the CMT, an extraordinarily difficult, okay, factor to get in your trading career. It's a market technician certification. It's extremely difficult. By the way, we have 3 of them on staff. These 3 gentlemen all have CMTs. But what Brandon's good at, Brandon's actually macroeconomics. I also want to give Brandon a little hand. Brandon also worked with us at TD Ameritrade. And what Brandon did for TD Ameritrade, he wrote, okay, the book for education at TD Ameritrade. And I'll tell you a little background on this because Brandon and I actually worked together in years past. There was a course at TD Ameritrade. It was a class to teach you everything about trading, right? It was an 18-month course. So Brandon worked exclusively on this 18-month course. The 18-month course, the cost of it was just over $24,000. I bet anything some of you actually took this course. Brandon wrote the book for that course because he worked in my group. Okay, he wrote the book for the course. We now have Brandon full-time on staff. Okay? The stuff that we do here at TheoTrade and what you're going to find in these courses will absolutely smoke what people used to pay $24,000 for. Okay, bar none. Next in the list, we have Slim Miller. Slim actually started trading in 1973 on the floor of the Chicago Board Options Exchange. By the way, that was the first year that options even traded in Chicago. Slim's actually, I've known him since I'm a kid. Slim just recently, okay, he hung it up. He moved from Chicago to Florida. He's still working. He'll never stop working. He's a trader. Last on the list, Tony Rago. This is the NASDAQ futures. Tony trades all day, every day with our clientele. Okay, so that's the first bonus, 90 trading classes. Next bonus. Okay, by the way, we're not done after this because there's a third bonus coming tonight, and it's a big one. The second bonus, we're going to give you an all-access TheoTrade VIP membership. What? And you're like, okay, that sounds good. That sounds good. What is it? It's just 3 months access to everything we do here at TheoTrade. What do we do here at TheoTrade? We have a live trading room. We broadcast 6 hours a day. Now, I know that not everybody can make it 6 hours a day. Right now you can because you have nothing better to do, but it's 6 hours per day, just live, okay? The traders in that room. By the way, when I say 6 hours a day, you're like, what do you mean 6 hours a day of what? You're seeing our screens. You're trading live with us. We're giving you trade ideas, real-time market insights, analysis, okay? By the way, we're no longer, we don't email trades anymore. We only do text, okay, and push. We figured out email, that crap is too slow. So we only do text and push notification, including in-out spreads. We do infinity trades. We do all of it. Okay. Next in here, there's 5 distinct trading portfolios. Then we have daily coaching sessions with timely topics on stocks and options and futures. So we're pushing out trades to you, but we're also giving you coaching sessions. That's continued education. Okay. And this is also, I believe, one of the biggest things. Okay. As I started off tonight, I was talking about the email address. Okay, and the support, okay, at TheoTrade.com. And I'll throw it up there because that's impossible to read in a moment, but I'll throw it up there. But I want you guys to understand one very important concept here. We answer emails. We will answer your email directly. You can actually ask us specific trading questions and say, what do you think of this trade? Please do not be offended. I will actually get on there and be like, that's the worst trade I've ever seen. What were you thinking? Okay, we're going to give you access to about $997. Okay, I think that the direct answering of your questions via email is worth more than that, but it's about $997 support trades and insight. So we're giving you full-blown access to a chat room. We're giving you texted ideas out to us. We're giving you daily coaching sessions, and we're going to give you access to all of the previous archives, everything. Okay. In addition to that, we're also going to give you access to all of our indicators and scans. Okay. Now this is the point where you're like, holy crap, I'm overwhelmed. Good. I'd rather you be overwhelmed than underwhelmed. We'll give you auto expected move. By the way, that indicator right there, okay, that indicator alone is worth 497 bucks. Okay, we're giving you that tonight. In about 2 minutes, I will give you the auto expected move indicator. Everybody's going to get that. We'll also give you, though, okay, when you enroll for this S&P 500 gravity points, TheoTrade RSI Laguerre, Quantix, NQ levels, next generation squeeze, complex position tracker, Theo Quant, sizzle scans, SPX expected move. There's a ton. It's $1,800 in indicators. This is the part that I always poke fun at other companies. Because other companies are like, I'm going to sell you an indicator and sell you an indicator and sell you an indicator. Why? Give them all away. Okay. Why do you think? All right. Why do you think that people write code? Because they want to be able to like sell some indicator? Absolutely not. Okay. You write codes in this to actually help traders. All that indicators are to help traders. They're not meant to be sold. Okay. They're part of it. Right? And each one of these has classes that wrap around these particular indicators. It's huge. Okay. And I stress this stuff. Now, there's a third bonus tonight. And I want to say this again. There's a third bonus tonight. Bonus number 3. We have a live class. It's coming. It's coming. It's this Thursday. We have done at TheoTrade so well with backspreading in the last couple of weeks that we're actually going to host pretty much an emergency volatility backspreads course with me. And this one's a little bit unusual. I'll tell you why it's unusual. First of all, okay, I'm doing the course. That's not unusual. What's unusual, it's a 2-hour course and it's held during the trading session. Why are we doing it during the trading session? Because we just realized everybody's home. Okay, our attendance during trading sessions, we have right now just over 5,000 clientele on TheoTrade every single day. Okay, There's nothing in this industry even close to those numbers. That's why we're constantly adding, okay, some more instructors, some email support in here, but we're doing this during the trading day. And I stress to you, the course, if you cannot make it live, it is live this Thursday. It is May 7th, 9 a.m. to 11 a.m. Central Time. The course will be archived immediately, okay, and it'll be download capability for TheoTrade Mobile, okay, and Android and iOS. But the course, okay, it's ready to go right now, and I'm going to host it live on May 7th. And that's why I said, you know, not only get access to 90 courses, you're going to get access now to 91 classes, the volatility back spreads. Now, what are the volatility back spreads? Okay, specifically, it's the trade I did, learn to place volatility trades. This is actually the Tesla back spread that I did back in November. So, by the way, I want to make this clear because everybody's like, oh, wow, you know, it's a class. It's included. It's because you're going to enroll tonight for 3 months, okay? But we want to get you enrolled and get this class up and running right now. It's important. The volatility back spreads are hitting it right now, month in and month out. We hit them, okay, starting in February. We've hit them in March. We've hit them in April, and we're going to hit them now in May. These things are huge. So this was actually a large one that I hit back in 2019. It is one of the largest, okay, in terms of the volatility back spreads. Put it on for a 20-cent debit, closed it for an $11 credit. It was huge. It was actually, I did enough contracts of this particular trade to put my trading account into ludicrous mode. So, by the way, I highly recommend, if you do not have one of these, you should get one. I actually took the proceeds, okay, and it corresponded. I've actually always wanted a Tesla, and it's not like I never had the money to go out in a Tesla, you know, and buy it. But I'll tell you what, it made it, how do I say this really nicely? Okay. I didn't hear anything from my wife from this trade when I bought this car. By the way, this one right here, that does not come with your, for your Tesla. That one, holy crap, that kid looks a lot like me. Anyway, that's the Tesla, which was purchased with the proceeds of the Tesla trade. And I was taking some shots in Tesla because, hey, my wife again could not say no to that one. So that's the Tesla trade that was done back, of course, in late 2019. Here's actually the IWM spread that I was detailing a little bit earlier. This is actually a version of a volatility back spread. And the criteria is really, really similar to the Infinity spread, but this one's put on for a 20-cent credit, taken out for a $6.48 credit. Here's the next volatility back spread that I did, also in IWM. This one's put on for a 43-cent credit, exited for $4.97 credit. I showed that trade a little bit earlier. Okay, what the class is going to be detailing on Thursday is when and how to use these trades. They're really minimal risk with maximum rewards. All I'm showing you here, this is a risk graph. Okay, this risk graph is actually of the IWM trade. There's really almost no downside risk. There's really minimal upside risk. And if we explode higher, your P&L can explode higher as well. So TheoTrade, listen, it includes everything you're going to need to invest in trade. So as I kind of detailed a little bit, and I'll go through and I'll answer some really general questions right now. We give you classes, coaching, okay, email access to the instructors. I put a lot of weight into email access to the instructors because I'll tell you what, there are coaching programs that will cost you $2,000 a month just for coaching programs. So what do you get to do? You get to email their instructors, right? For $2,000 a month. You email us, it's part of it. Okay. I answer, okay, hundreds of emails a week. We have another gentleman here that literally answers thousands of emails a week. We're traders, is what we do. You know, if I have to stay up late on a Sunday night to answer emails, we do it. Okay. I've been doing that for over 20 years. And it's no different to me. Okay. We also have a live trading room and live trades. We text out trades. We give you indicators and scans. Okay. We give you, again, there's going to be now 91 classes, mobile access. It's everything that you're going to need to succeed. It's literally everything. If there's something that you need in this business and we're not giving it to you, I want to know about it because we believe that we've built TheoTrade is the Netflix for traders. It's like every single genre of trade you could ever imagine is in this. Okay. Tonight, it's $297 for 3 months. Okay. We do that because we want you to be part of TheoTrade. Now, before I go any further, I want to detail something. Okay. The $297 is for 3 months. What do we give you for 3 months? Everything. After 3 months, what happens to the $297? That's it. Okay? This is not a membership. So I want to clarify that. Not membership. Because people are going to ask me 100 times. It's not a membership. We don't do that garbage anymore. This is not like the gym. How do you get out of the gym? You don't. Okay? This is not a gym membership because that stuff doesn't work. We want you to be here because you want to be here. It's $297 for 3 months. After 3 months, how much is it? $297. After that, you make a decision. You want to do it again? It's $297. Okay? It's just $297. That's it. Okay? Now, what does it actually give you access to? Everything that we detailed. So I'll go through this quickly because I want to answer some of the questions. We're actually going to give you the class, the infinity spread class. Its maximum returns with infinity spreads is included in the unlimited streaming. Also included, 90 other classes. Also included, make that 91 classes because there's a class, okay, May 7th. So the volatility class, the volatility backspread class is coming May 7th. There's obviously new monthly classes. Every month we're coming out with new classes. We'll give you the live trading chat room. I'm going to show you that in a second. We'll give you real-time trade ideas, real market insight. I'm on there at minimum an hour a day. Broadcast live 6 hours a day. We give you the indicators. We give you text and push notification. Again, text push notification. 5 distinct, different trading portfolios. We give you daily coaching sessions. Jeff Bierman does a lot of that because he's a professor of finance at Loyola, stocks, options, and futures. And we directly answer your trading questions via email. By the way, when I say we directly answer via email, okay, I don't want to hide behind any crap. You go there, you ask us a question, we're going to answer it. Okay? If you ask me like, is Microsoft going up? I'm going, look at the Elliott wave. No, we'll give you an answer to what you want to know. Go right now to TheoTrade.com/profit. Okay? PROF. Okay? IT. Profit, like profitability. TheoTrade.com/profit. Now, bear with me here for a moment because I'm going to then jump in and answer some questions. We're going to add one more thing to this. TheoTrade, make it a completely riskless trade. Okay? Want to make this easy for people. We want to make sure that everybody, okay, that comes into TheoTrade is satisfied. It's like one of the most important things. So we have everything you're going to need to start trading from novice to expert. Everything you need. In fact, I am going to bring this up momentarily, but I might as well just bring it to you to your attention right now. When I say we have everything you need from novice to expert, I think this is a pretty good place to go. This is TheoTrade. By the way, this is TheoTrade, and I'll show you a little bit more in a minute. This is the chat room. But here's the Start Here menu. Okay? What's a Start Here menu? It's just that. It's a Start Here. It has everything you're going to need because you're like, I've never traded an option before. That's where we start with Options 101. Okay? Working at Options 202. Right? Literally, we've built like a university level, situation here that you can go through. I'll tell you something about this. If you've never been through here before, order execution part 1, 2, and 3. Okay? This entire thing for 3 months, is $297. I will promise every single person in this room, and I do not care how experienced you are. Order execution part 1, 2, and 3. Okay? I helped build some of the order execution on Thinkorswim, which is one of the most complex order routing systems in the entire industry. Believe me, we know order execution. That's actually my baby. That's my class. So I wanted you to know, and I'll bring that back up in a minute. From novice to expert, we're going to help you. Excuse me. We'll give you a money back guarantee tonight because we want to make sure that you guys are happy. Trade with us for the next 3 months. If you're not totally satisfied, just email us. There's the address, by the way, support@theotrade.com. Provide us details of your trades. If you're not happy, receive a full refund. By the way, we do not clarify what the word satisfied means. I want you to be satisfied. You have to do 5 trades. Okay, using the TheoTrade strategies and criteria for the next 3 months. 5 trades is it. The initial account value has to be $2,000, and you have to follow our criteria for infinity spreads. So what are we asking you to really do? Okay, nothing. We're just asking you to follow the trades. Okay, if you follow our trades and you're not satisfied after 3 months, and you've done 5, for instance, infinity spreads, okay, that's fine. provide us real account statements. By the way, they have to be real account statements. This ain't paper trading, people. Okay, but I didn't want you guys to think the stipulations are like hard and fast over here. The stipulations, okay, all I'm saying is most of you trade anyway. Just follow our criteria, and if you're not happy, we'll give you your 297 bucks back. You have to realize it's $297. We don't want you here if you're not happy here. And if you're not happy here, we get it. Okay, that's why we make it a riskless trade. We make it a riskless trade because it's $297. Okay, I mean, we don't want anybody, upset over that. So we make sure that everybody that's coming in here, okay, we want you satisfied. We want to be able to email. We want you guys to be able to be supported here at TheoTrade. So do 5 of these infinity spreads in the next 3 months. If you're not happy, we'll actually give you your 297 bucks back. Get into TheoTrade now. We're going to work with you directly. There are 40 spots, though, on the riskless trade deal. Now, I want to clarify something. We do 40 spots on the riskless deal. The reason we do that, we have to look through and reconcile everybody's trades, okay, which takes a huge amount of people power. I mean, there's a huge amount of people power because people will send us their trades and like, hey, can you look at this trade? Can you look at this trade? Can you look at this trade? Throughout the course of the 3 months. There are 40 of these spots in here for the riskless trade deal. And again, the riskless deal, if you're not happy, you get your 297 bucks back. We also give you unlimited email mentoring. And I stress again, that alone is easily worth 297 bucks. Send us your trades. The $297, the riskless offer, it's never been available before with infinity spreads plus the live volatility backspread course. Okay, I mean, you're getting both of those classes in there. I mean, you could watch infinity spreads tonight and the volatility backspread course, it's this Thursday. Okay, it's this Thursday. And we want you guys to know it's 40 spots on this thing. I'm actually going to throw up the web address here momentarily again. By the way, what our members are saying, this is from Brian. It's March 16th. Don, wow. I want to thank you again, or I want to again say thank you for what you've taught me in the last 2.5 years. I bought into what you taught about risk twist spreads, which is part of the infinity spread, and duration positions. And I started to trade options almost a year ago. I missed out on the last market move up. Okay, but at the moment, my IRA is up 14.8% for the year. Now, I want to stress something here. This is on March 16th, which is almost the bottom of the crash on the Corona crash. This is this March 16th. This gentleman's actually up in an IRA almost 15%. What I have invested in TheoTrade has been so worth the money. Thank you. That comes from Brian. Okay. The next one over here comes from Chris. This one's on March 26th. I've learned more in the past 4 weeks managing and defending my portfolios than I've learned my entire trading life. Nothing I've learned, okay, would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe. It's from Chris. Again, this is everything that you guys are receiving tonight. And if you would, okay, go right now to theotrade.com/profit. I'm going to show you why, because I'm going to give you a link on there. Okay, the bonuses, again, all of this is 297 bucks. Once again, it's not a membership. After 3 months, we never auto renew. We don't auto rebill. It's 3 months. It's the chat room. Okay, everything's archived. We text you out trade ideas, trading indicators and scans, daily coaching sessions. The next bonus, there's 90 classes now. Okay, including, again, now this has bonus number 3. Okay, and the third bonus, of course, is the live backspread class that's going to be coming on Thursday. So if you follow me to this link right now for the auto expected move indicator. I'm actually going to take you there right now. Again, it's theotrade.com/profit. So let me go ahead and pop this up. There is actually the web address, and I will once again make this a little easier for you guys to see. It's theotrade.com/profit. This is maximum returns with infinity, okay, trades class. There are 40 riskless trade spots. And we do, again, the 40 spots. We're here to help you. If you have questions, hit the chat button over here. But I wanted to show you, where is the link? Okay, the link to the auto expected move. For those of you that are enrolling, okay, it's 297 bucks. Click add to cart. When you go over and click add to cart, there's a lot of people obviously clicking it right now. Okay, this is the Infinity Trader. Cruise down. Okay, name, all your information. The reason I'm showing you this is I want you to know it is a one-time charge of $297. It's a one-time charge of $297. Hence why I'm actually detailing that on the site. Okay, if you go to this web address, theotrade.com/profit. If you scroll down towards the bottom of this page, it's the auto expected move indicator, right? That's it. It's right there on that particular page. I also want to remind you, as you guys are enrolling, if you cannot make the Thursday class live, it is archived immediately, like literally like 5 minutes after the class, the whole thing. It's an emergency volatility back spreads class. Now, I am going to jump in and I'm going to answer questions directly for some of you. However, first, before I get into the questions, I actually want to show you a little bit about TheoTrade. This is TheoTrade. So this is actually where we broadcast every day. You can see we're off air. It's just when we broadcast, all of a sudden this turns into my screen. Down below over here, this is the chat room. What do we do in the chat room? We chat, and I want you to see. See how there's individuals right here that are highlighted? That's Matt Williamson. It's one of our instructors. So if you actually start to cruise back, Matt's actually having conversations. This is, after hours during the trading session. I want to reiterate this. During the trading session, there's anywhere from 3,000 to 4,000 people in and out of the chat room throughout the course of the day. So you can have your own little nickname in there, put up a little icon. Hey, keep the chat room PG-13. That's all we ask. Keep it PG-13. And we post trades in the chat room throughout the course of the day. You can also see this is a reminder on the top. It says Volatility Back Spreads class is coming. We're telling all of our members, it's coming! Thursday, May 7th, 9 to 11 is that class. And it's going to happen right here in this chat room. The next, this is the classes. Right? We're like, okay, there's 90 classes here at TheoTrade. What kind of classes do we have? Classes are broken down to genre. We have option strategies and option newbies and technical analysis and day trading classes and stock classes, futures. As I said a moment ago, it's like the Netflix for traders, right? And there's hedging classes and there's trend trading classes and there's pairs trading classes. There's even mindset. What does it look like? So if we click on option strategies, so you go ahead and we'll click on the option strategy classes, like, what kind of classes do we actually offer inside of the option strategies? Here you go. Sell premium, minimize risk, iron condors, the risk twist spread, right? How to collect income being short, in-out spreads, strategy week, fruit fly, straddle class, volatility crash course. This was just done 3 weeks ago. Survive and thrive in extreme volatility. So yes, there's 2 different classes on volatility. Why? Because things got kind of serious, right? We've got classes on earnings. I mean, this is just the options genre of things. This is obviously, as I said a moment ago, this is the start here menu. Right? You want to start somewhere? Listen, we have everything from the absolute basics to the extreme. This is our member home. What's the member home? This is like the Google, for different strategies. You could type in like volatility, or you could type in, for instance, infinity, So if you type in something like infinity, or you could type in like in-out spreads. Type in-out spreads. Every single archive involving in-out spreads will pull up. Happy hour, swing trades with in-out spreads, the ins and outs of in-out spreads, It just goes on and on. There's that much in here. And again, I think people, the first time they see TheoTrade, they're like, holy smoke, this thing is crazy. We have a lot. We have a lot on the site. And for $297, I hope you are overwhelmed. You have 3 months to dig in here. Don't go downstairs and when I say downstairs, I'm in my own house, but don't go downstairs and like binge watch The Sopranos, which it's over, people. Don't binge watch The Sopranos because you got nothing left to watch over here. I'm telling you, binge watch what we have here at TheoTrade. You got to come out of this whole Corona mess having learned something, and we hope that we provide you just that. All right, now I'm going to answer some questions in here. Again, go to theotrade.com/profit. Just click add to cart. There's the link on it. Here's some of the general questions. I'm going to do general questions and then detailed questions. So as you guys are actually enrolling, and again, the riskless spots are filling up right now, and I'll tell you in about 5 minutes exactly how many spots we have left. Listen, questions answered. You need a laptop and an internet connection. Frankly, I don't even think anymore that you need the laptop. If you want to use an iPad or an Android tablet, you're fine. You can actually trade off the iPad and the Android tablet. It's absolutely fine. We literally have everything you're going to need to get started from novice to expert. And I always challenge people with this. If we don't have something and you think that we need something, you tell us. We have over 5,000 clientele now on TheoTrade. We have buying power. If we don't have it, we'll get it. If we need to hire somebody, we'll do it. It's important that you guys know that. All right. The second thing on here, it's not a membership. We don't do that. We don't do this auto renew. We don't do this. There's a couple $100 here and $200 here. Listen, this thing is $297. Okay. It's 90 classes. It's all the coaching sessions. I'll give you every single archive too. And after 3 months, if you want to do it again, let us know. It's $297. Okay. Listen, we don't want anybody here that doesn't want to be here. We don't want anybody here that's disappointed, that they just paid $297. We don't let that happen here. Okay. Number 3, we're providing Infinity Spread's weekly video update so you can follow all the trades. So I want to reiterate that one again too, because people kind of forget about that. We're actually giving you a weekly video just on the Infinity Spread strategy. Number 4, we archive everything, every word spoken, we archive it. Okay, period. Number 5, we're going to provide you access to TheoTrade Mobile. You can download the archives and view at your leisure, right? So you can download anything. It's TheoTrade Mobile. And you can actually speed it up and play it back at like 1.5 times the speed when you're on mobile, okay? Number 6, you can email us anytime you want. You're going to receive a response within 24 hours. Hey, listen, the last couple of weeks, total insanity. We're getting 1,000 emails a day. It's fine. We'll get through them. It's 24 hours. We have 24 hours. Who needs sleep? I don't need no sleep. And I'm quarantined just like the rest of you, except I'm quarantined with 3 little kids. If I can hide with an iPad and answer some emails, that is a good time, people. Number 7, you're going to gain access to every course that we've done in the previous 4 years. You're going to get classes and coaching sessions and live trading sessions. Everything is searchable. Name a trading topic and we have an archive on it. Number 8, all the trades can be done inside of an IRA or retirement account with as little as $2,000. Number 9, we can help you get approved for options. A lot of people come to us, they go, my brokerage firm will not approve me for options. Well, guess what? Okay, one of my closest friends, she runs E-Trade. One of my other friends, okay, gentleman, he actually runs part of Charles Schwab. Okay, my other friends obviously work at TD Ameritrade because I spent, almost 15 years with them. Another friend that actually built the company called Tastyworks. It goes on. We pretty much know the brokerage side of the business. We can help you get approved for options, not a problem. By the way, if you're Canadian, we can help you with Canadian broker dealers. Number 10, okay, there's actually tonight, we put in 40 riskless spots. We actually added an individual. We're going to have 40 riskless trade spots are available. Number 11, hey, listen, get results, take action, enroll for TheoTrade. There's no risk whatsoever. It's theotrade.com/profit. Now, I want to go into detail and answer a couple of more questions for you guys, some generalized questions here that have come up in here. By the way, what our members are saying, by the way, you guys are rocking it. Very impressed. And I love this one, so I have to read this to you. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. And I like that one. I also like this one. It's so amazing what we learn when we listen. Thanks to my ex-wife for this quote. Don's a wonderful teacher. I've learned and enjoyed listening and learning from him for the last few months. I love how Don goes about explaining and showing everything, going through the mechanics. Again, it's theotrade.com/profit. I'll take you back over here to the actual enrollment page, and let's answer some generalized questions. By the way, on here, just click Add to Cart. You're good to go. Enter in your information. So some general questions that have actually come in, and I want to hit these. Okay. By the way, Gary, hang with us for a second. We've actually got Matt, Jeff trying to help you out in the chat room over here. Okay. William was actually asking, how much buying power do some of these trades tie up? So one of the part of the infinity spread I was showing you, it's anywhere from about 600. Okay. It could be 600 on up to almost $1,000 of buying power that one unit will actually tie up, dependent upon what type of back spread it is. By the way, that is a big, William, that's actually a big portion of the class. Okay. It talks in detail specifically about margin buying power reduction. Barry actually asked, are back ratios the same as credit spreads? Absolutely not. Credit spreads are actually, you're going out and selling out of the money spreads. Back ratios, it's a different animal. The back ratio, okay, this is a big boy trade. And I'll tell you what, back ratios over the years, they haven't been that good because volatility hasn't been that high. So what happens with back ratios is you hit 2 or 3 a year, but when you hit 2 or 3 a year, they're grand slam home runs. Right now, it's like every other week we can make money off of one of these. Nobody's ever seen anything like this, and it hasn't subsided. It is a great time for the back spread. Adrian, what's the maximum potential loss for the trade? So Adrian, a huge amount of what we do in the infinity class, okay, and when we teach the back spread, is to mitigate that downside risk, and that is, okay, expressly in the criteria. Now, if the buying power reduction is $600 and you completely fell asleep at the wheel, could you lose $600? It's possible, okay, it's not likely, but nevertheless, okay, we are going to mitigate the downside exposure, and Adrian will show you exactly how to do that. Okay, next one, when I learned to do these on my own, do you give the trades? Okay, we actually will give you, we'll text you out trades. So I want people to learn to go out and to execute their own trades. And to do that, what do? You go out, you do a trade, okay? Or you build a trade, email us, and we'll give you feedback on that trade, and you get back to you, and you can place the trade. And sometimes the trade's so good, we'll place it with you. All right. So absolutely, like we want you though to be, we're going to text you out trades and we'll feed you, but we want you to learn, okay, how to do this. I mean, it's $297 for it. So a lot of people just stay tuned in and getting text, the trades, but we really do want people to learn this business. Okay. Oh, I like this. So not really directional. So you don't need to know where the stock ETF is actually going. Okay. In this particular strategy, no, it's not directional. Now, I am going to tell you this, okay? I am going to tell you this. There are times where I will place a really bullish trade or a really bearish trade. I will absolutely place bullish or bearish trades. But when I'm doing it, if I'm wrong, I'll end up not losing much of anything. And there are trades that we do that are bullish and bearish here, okay? Absolutely trades that we do here at TheoTrade that are bullish and bearish, and the trades that we do that we text out that are bullish or bearish. This particular trade, like the infinity spread, is very much, though, market neutral. You're just looking for a huge move, okay? Okay, the next one. Do you use the spread on earnings? Absolutely not. It does not. Earnings will kill you on this trade. That's actually some of the criteria in there. You better avoid earnings because it's a huge pitfall over there. By the way, again, somebody was asking over here. It's theotrade.com/profit. Okay, it's right there, the profit portion of it. I just want to make sure you guys got it right because somebody just asked it in the room over there. Oh, do hedge funds use back spreads? Absolutely. Hedge funds go a little bit deeper though. They use closer to the infinity spread. It's a type of ratio. And I can get into specifics of who uses it, who doesn't. Okay, a lot of what we call crisis-seeking funds. In fact, some of the largest home runs that you heard of during the financial crisis used versions of back ratios. And, people heard about, the mortgage crisis, and these guys were using derivatives. They were just using a type of what is known as an infinity spread. Okay. This is not a trade where, the ratio spread isn't something I developed. Okay. The infinity spread is both sides. All I did was marry the two together. And that's one of the differentials over here. All right. So will you suggest possible trade ideas on the course on Thursday? So you know what? I can't, I'm going to be very forthright with you. I can't tell you that Thursday is going to be the best day to trade a back ratio or infinity spread. I'll love it if I can get a trade off on Thursday, but if I can't, I might get one on tomorrow. I might get one on Thursday. I'll get one on Friday. I will execute when the market allows me. And there's one thing, and I say this to everybody, I will never allow you to dictate when I will trade. It is my money, and I will only put trades on when trades are appropriate to put on. I'm not here to put on a show. I'm here to actually make money in my account, and I recognize that I have 5,000 plus people watching us at the exact same time, and I hope you're not offended by that, but that's the truth. You got to put these things on when the market feeds you. Like, it's not about your appetite to trade. It's about the market feeding you. And I hope that again, kind of comes clear as you see how these trades progress. You don't put one of these on whenever you want. You put them on when you can get them on, right? By the way, somebody said if you're already a member, will you be able to attend the class? Yeah, of course. Yeah, Bobby, you're good. Um, so if you sign up tonight, you're into the class, right? Everybody gets to go when it's part of TheoTrade. By the way, how many contracts do you need to get to Tesla trade? By the way, David, you could have done a 1 by 2, okay? In Tesla, okay? You could have done one contract. I'm going to tell you, in the Tesla trade, I did not do an extraordinary number of contracts. What I did is make $11 on some decent contract size, and it was just the trade was just a home run. Okay, I mean, I'm not going to tell you right now that you're going to do enough contracts to buy the Tesla over there, but it definitely cleared the way. There was my wife's like, "Do you need another vehicle?" Yes, of course. Okay, and this one doesn't make any noise. Okay, and it's really safe. So, of course, the first day I had it, I put the child into the Tesla and backed up the vehicle with my phone with the child in the Tesla. It was just out of the garage. Okay. Uh, that was not a good idea, according to my wife. Right? It's not child endangerment. I was just simply showing him how an iPhone could drive a real car. I was actually showing the 7-year-old how the 5-year-old could go in the car. Do not try this at home, people. Okay, I think I got most of this. By the way, how many of these do you have to put on each week or each month? So the infinity spread itself, okay, is going to be placed very hands off. You could do that. The infinity spread itself is really like 4 or 5 times a year. But right now, okay, right now, the back spreads, the volatility back spreads, which is typically bullish trades, those back spreads, and they're all over the place. They're good right now. Volatility back spreads are really good at this point in time. By the way, before I go any further, I'm going to answer a couple more questions. I want to thank those that have enrolled tonight. I don't know if we're at the full. We have 40 riskless spots left, but I'm going to count this as I go. I want to thank Steve B. from Wisconsin, Kevin H. from Texas, Nicholas A. from California, Thomas A. from Canada. By the way, again, if you're from Canada, I can help you get brokerage firms up in Canada. Email us support@theotrade.com. We've actually got a couple of Canadian brokerage firms that we suggest. Richard G. from Florida, Samuel T. from Tennessee, John W. from California, Alan P. from California, Joe G. from Florida, Daniel E. from Australia. So I'm a resident Aussie. I went to uni in Australia. I actually lived in Townsville. Matthew D. from Colorado, Vincent S. from California, Marilee C. from Washington, Edwin S. from New York, Sushin from Massachusetts, Stephen S. from Connecticut, Richard H. from Texas, Douglas C. from Utah, Matthew M. from Iowa, Vera J. from Illinois, Scott C. from Maryland, Sudhir, I don't want to butcher your name, K. from Washington, Patrick K. from Canada, Adam D. from South Australia, nice. Got a couple of Aussies on tonight. Ronald A. from New York, Mark B. from Utah, Bart R. from Florida, Virginia D. from Indiana. There are 12 riskless spots left, and I'm trying to add up and do the math as I'm talking, walking, and chewing gum. By the way, David came in here and said, is the SPX expected move indicator the same as the auto expected move indicator? And the answer is no. The SPX indicator started it all. Once we actually saw that there was some fruit that was bearing in the SPX, we started to build an auto expected move, and the auto expected move can be applied. And you know what? So I like to display this for a second. The auto expected move, you just click on it, and it draws expected moves. Now, we also have hand drawn here in the SPX. When I say hand drawn, in the SPX, I literally go in and I draw. Every one of these lines was drawn by hand. Right? You're like, so what's the difference? The difference is in the auto expected move, I can go into any product in the entire marketplace and instantaneously, okay, deliver that. The whole key is this. We just gave the auto expected move indicator to everybody, but you need the strategy to be able to make money from it. It's not about the auto expected move. It's about building the right strategy off the auto expected move. And it is a phenomenal indicator. Okay. All right, I'm continuing on over here. By the way, Jeff, I fully appreciate, Jeff, your comment in there. That's absolutely killing me. Just joined and do not have a cell phone. Okay, we'll be able to log in sent by email. Yes, so we got you. We got you there, Virginia. No problem whatsoever. By the way, you're in a You're not in the minority without cell phones. There's more and more people now bailing out of the phones. Okay, so we're all going to be quarantined with no phones. It's a good life. All right, I am. You know what? I've run over here. I'm going to stay here, and we're going to type a couple of answers to a few questions in here. Listen, I've gone way over in time, and I want to thank everybody that has joined us this evening. By the way, a bunch of people just signed up. Dilbert W. from Georgia, Godum K. from Kansas, Raymond C. from Florida. Thank you guys for enrolling tonight. At that, again, I know a bunch of people are still enrolling. I know that there's more questions, okay, in here. I'm going to sit here. We're going to try to answer some of those, myself and Matt and Jeff. If you ever need to get a hold of me after tonight, support right here. Support at TheoTrade.com. Thank you again for joining us tonight. Have a wonderful night, everybody. Bye-bye.